In the meantime, can we have introduction of the members so that we can know what we are, at which city we are, what profession we are into. So I'll get an idea how much we are aware of the course which we are entering into. So I'll plan my session accordingly. Can we start with members who would like to introduce? मनमोहन जी से start करें.
Yeah, good morning all.
Good morning, sir.
I'm Manmohan Sharma. I'm a chartered accountant.
And sir, कहाँ से हैं sir आप? Which
मैं
city?
Delhi.
अच्छा, Delhi से हैं. And valuations, is it your first time you will be touching valuations or आप valuation को पहले से भी
Yeah,
करते आ रहे हैं?
valuation for the first time. I've done IRP.
Okay, you are done your IP. Okay.
Yeah.
Very good. And Arunji, if you like to start.
Hello all, good morning. My name is Arun and I'm a cost accountant and company secretary from Hyderabad.
And
so this is my first time into valuation. Yes, sir. This is the first time in valuation.
How is the situation in Hyderabad? I understand 2-3 days it was heavy rainfalls and things were not good there last 3-4 days.
Yeah. Since last 3-4 days it was hectic, but right now situations are into control, sir.
Purushottam sir, Purushottam sir.
Good morning. I am Purushottam from Mysore. Hello.
Yes, sir. Audible, sir. The city of palaces.
City of Palaces. I am practicing cost accountant.
Okay.
After serving 40 years in public sector industry.
Which industry, sir?
After serving 40 years in public sector industries, I retired from BEML.
Okay.
I am BSc FCMA.
Okay, great, sir.
Yes, I am just starting the valuation course.
Okay, no, that's good. Everybody starts. I also started 3 years back, so starting is not an issue.
I am not IBR or anything.
Okay, no. Mansi ji, we can have your little intro.
Yeah, hello. Yeah, good morning. Am I audible?
Audible, ma'am.
Yeah. Good morning, all. I am Mansi from Pune, and I'm working with the KP Corporate Solutions company. Company is basically into ESOP related financial services, and I'm working there as a finance and accounts manager.
So for you, this course is very important.
Yeah, actually, there is very much scope.
And because last 3 years I'm into valuations, I realized ESOPs is one of the most complex valuations and one of the creamy type of assignments, because it's very niche area and we can demand a premium on the services. Very few companies in India who actually deal with stock and with the ESOPs. And due to the increasing startup culture, everybody is issuing ESOPs. So yes, it's a huge opportunity for professionals, at least for valuations in ESOPs. Good. And Shraddha Dacholia ji, you can have your intro. And if you can keep your video on, because the only issue is your attendance might be an issue, because IBB has issued a guidelines to the RVOs that the video should be on all time. I don't know how to handle this, but that's what. Please.
Morning all, my name is Shraddha Dacholia. I am a company secretary by profession from Kolkata. And this is my first time in the valuation course.
Okay. And I think last we have Shalini ji who was joined.
Yeah, just a second.
Please take your time.
Hi, this is Shalini. I'm a company secretary in practice by profession, and I want to explore this this area of valuation and everything. Basically, I'm dealing into FEMA matters, mostly FEMA matters, and valuation is an important part for those matters even. So I'm joining this program for that purpose only.
And you're based where?
I'm based in Ghaziabad.
Based in Ghaziabad. So I think we all probably have introduced. I'll introduce myself shortly. I'm just seeing anyone left to connect.
That's
I think we have covered everyone who is probably logged in as of now. So good morning, everyone. I welcome you to the valuation session for the first day. It will be run through 6 days. Probably this is one of the best courses coming in last 2-3 years for the profession. I'll just touch base. So after flaunting my degrees, the only timing difference, and those who understand AS22, the only timing difference between you and me is registered value degree. I have it 3 years back. You will have it in next month or so. This is one of the easiest subjects, even if you are not done valuation ever. And why, I'll tell you shortly. So I'm born, brought up in Jaipur. I secured first position in CA Inter in CRC region. I did CA, then I moved to Delhi. I worked in Delhi for a few years. Then I worked in Mumbai. I joined PwC Mumbai for 5 years. And after moving from PwC, I went to Middle East. I worked in KPMG, Bahrain, and investment bank for almost 9 years in Middle East. And 3 years back, लौट के ढड्ढा घर को आए. So I completed the circle and moved back to my hometown Jaipur. And now mainly we are working in Jaipur and Delhi. And my only domain area to work in India is only in valuations and India's consultancy and little bit on insolvency professionals. I do not do tax, audit, other things. That is not in my cup of tea. Now, the benefit for all of us is whether you are a 5-year practicing CA, CS, CMA, or you are 30-year-old practicing CA, CMA, whatever number of experience you have, this course is new for all. It's a very new course. Early movers will get advantage. And right now it is just a tip of iceberg. Valuation profession has been recognized by government officially last 3 years back only. And right now it is just covered under Companies Act and under IBC. But very soon you will see entire India, only one act will prevail for valuations. So you will have a good opportunity if we enter into right now. And this is a good time to enter. If other participants can keep their mics mute for the timing, then it will be beneficial for all.
Sumitji, you are authorized to mute that participant.
Okay, I have that. Okay. Let me check. I have that power. Yes, I have the power. Okay. Now, if we talk as of yesterday, we have total 3,468 registered valuers. SFA asset class for which we are studying, we have 1,272 members registered pan-India. It includes all 3 asset classes from all 3 CA, CS, ICWA and MBAs also. So total all 1,272. Land and building 1827. Plant and machinery are in minority. They are very less in India, 369 only. So these are the individual numbers demographic. Registered value entities, we have 27. What is the difference between individuals and registered value entities?
Sumitji, one entity is going to be registered today itself.
Today. So by that's the reason I have written 16th October. I know, because I was expecting one entity will be registered under All India Registered Value Foundation. It was supposed to get it done yesterday, but could not for some technical paperwork. It will be done today day. So we'll have a number 28 today. Now, understand the difference between what do we mean by registered value individuals and registered value entities. Unfortunately, this is unfortunately or fortunately, unlike our CS practice, what I can do in my CA practice, I can take my COP in individual name, practice as a Sumit Hadda is individual, and I can also become a partner of XYZ company, XYZ chartered accountant firms, and I can parallelly run both the entities. So I can be a partner at the same time in a partnership firm, and I can also be an individual sole proprietor in a CA or CS practice. Unfortunately, in IBBI, they have removed this condition. So in IBBI, either I can work as an individual registered valuer, or I can work only under registered valuer entities. I cannot contain two same set of valuation under individual also and RVE also. Now, what is RVE? RVE can be either you can form a company, or you can form a LLP, or you can form a partnership firm. It can be either formed by 3 asset classes or by single asset class only. Let's say me and Vijayji tomorrow wants to do a partnership. We both can make a partnership and register ourselves as a RVE entity with IBBI, but we cannot then practice individually. Then whatever we need to sign, we will sign as the firm only. Now, one small question from you. Now it is almost 3 years, and you can see the data. As of now, we have 3,400 almost registered valuers. Still, in last 2 years, we have only 27 RVEs only. Why majority of people are still preferring to work in individual basis and not willing to work on group basis or entity basis or firm basis? Anyone has any thoughts? Now, before you have any thoughts, you tell me which sounds better. If I go to a client and say, I am Sumit Hadda, individual registered valuer, and these are my credentials. Or I go to a client and say, I am a Sumit Hadda, partner or a director of XYZ valuation company, and this is my credential. We have a team of 5 valuers or 6 valuers. As a client, which will give you more comfort? Individual or a company or an entity? Anybody would like to have views on this? You can unmute.
Sir, I think,
Yes, please.
sir, I think it would be the entity that is a partnership firm.
So that is
That
a
gives more comfort to the client.
always client will always prefer more comfortable with the entity, because in entity your delivery risk is reduced. So if I am an individual, if I get ill, your work will get ill, because then nobody can perform, because you are relying on a sole individual. But if you have given a work to a firm, they will be rest assured that if Sumit cannot perform for any reason, then Sumit's another partner will take care of the engagement. That is the always client's mindset. Having said that, we all know this fact that client will always prefer registered value entity. Then why do you think the number is still too less? Do you think this number is high or less, considering the number of people practicing in individual? So if I compare 1200 people, 72 people are practicing individually, and only 27 firms have been made till date. So in last 2 years, only 27 firms. What is the reason people are you think? I know nobody knows the correct answer, but I'm just trying to think on thoughts. Why do you think people are more willing to work on individual basis and less preferring to work on firms? Any particular thought process? Anybody like to think?
Maybe because of the trust reasons, if people are not very trustworthy when it comes to partnership firm, and they want a very reliable partner, which is difficult to find. Maybe this is one of the reasons.
This is one of the reasons, because partnership or any entity starts with a trust and mutual understanding. So that is one. Second,
Unless and until it is a very renowned firm or the partner is very renowned and reliable, I don't think people would like to enter into partnership firm.
okay,
That's
that is one. But the problem is it is just started this year, so there is no legacy. This registered value entity and valuation, the concept recognized in just 2 years back only. So there is no legacy where somebody can say it's a good firm. Like we have big fours. So but now everything is zero from RVE perspective, because it is first time. One of the reasons why people do not are coming more into individuals and not into, one is trust, second is issues on, because it is a very new area, we don't know much people. So and since we have land and building, plant and machinery, these 3 different classes. So when you are working with engineers or different backgrounds, a mindset difference is there. That is second. Third, the most important reason why people are preferring less on RVE, there is one regulation in valuation rules which says if you are a partnership firm or a company or a LLP, and if one of the partners issued a wrong report, or he signs a wrong report, or he may do a goof up in any valuation engagement, then the other partners will be jointly and severally liable. So this word jointly and severally liable cause a lot of discomfort to a lot of people, because they say, if my partner has done a mistake, you penalize him. Do not penalize me also. Just like, which is normally in CA practice, if my partner has done a mistake, ICA will take action against the partner, not on the firm. But here they are taking here they're taking action on the partners also. So that is one of the reason. So this is one of the reason, which is a mindset which is blocking a lot of people. But having said that, I'll give you just one statistics. Till 2019, there are only 10 registered valuer entities. Only 10 till 2019. In 2020, when the entire country was in pandemic, 17 new firms got registered. So we got now almost double what was there until 2019. We got 27 firms now, and 17 registered only from January to October till date yesterday. What is the reason it worked so much that people immediately started opening so many RVs? That we'll understand in next half an hour. But now the next slide is not for weak-hearted people. And this next slide, I'm not trying to scare you, but I'm trying to bring the facts to you so we all are mentally prepared, that we know where we are entering into. So this is an exam passing percentage synopsis issued by IBBI every quarter. If you can see from March 2018, when the first exam started, till March 2020, generally the passing percentage is 15%. Now this 15% may look like a very low percentage to few people, but if you ask any CA student that the passing percentage is in a 2-digit, he will be more than happy. Because when we did CA finals, our passing percentage was 2%. Now if somebody says it is 15%, I'm more than happy. So passing percentage is fine. 16 to 15% is fine. Now, why it is 15% generally, we also discuss that why it was 15%. But significantly, if you see, the drastic downfall happened in April to June 2020. So from April to June 2020, the passing percentage went down to 6%. So this should not be taken as a benchmark. It is outliers, one of the exceptional events which damaged the entire percentage structure. Any idea why the number would have fallen so badly from so continuously? It was from 16 to 15% range. How it went to 6%? Anybody would like to have some thought? And I know it's very, very common sense thought. Nothing rocket science about it. What would have happened that 6% result would have come in April to June 20? And this will be relevant for you, those who want to take this degree. If you need to think, you'll get an answer. Anybody like to think on this? What would have happened in this June quarter that number has come so down? And again, the exam is MCQ. So ऐसा भी नहीं कि it was a subjective answer. You need to write a lot, so it might have make impact. So exam was MCQ, so that should not have impacted.
I think,
Yes, sir.
I think syllabus might have changed.
Sorry, I could not hear you.
It became more stringent.
Okay.
I guess syllabus might have changed.
Okay, there are
So
two. Yeah.
syllabus became more stringent. A lot of preparation.
I will not agree to the syllabus become stringent, because there was a very small change in syllabus. So exactly the one point was your syllabus got changed from 1st of June 2020, and for you now the new syllabus will apply. But in the new syllabus, there was only 2 or 3 marks differentiation. It would be nothing much that the entire context would have changed. Syllabus was as it is, just 2 marks or 3 marks alignment got changed. So something which was coming of 3 marks in previous syllabus, now it is coming of 2 marks, and one mark has been added to some other topic. So syllabus did not change. One of the main reasons what happened, one, the exam syllabus changed from 1st June, so question bank changed, new questions started coming. Second, the most important reason why the number came so less. So we all know the country was in lockdown from March till June 15th. So till June 15th, nobody gave exams anywhere in India. So exam was not happening. This exam happened only from 15th June to 30th June. But now what was the problem? People would have done the course in January or February. They have completed the courses. They were not able to give exam from March, April, May. So 3 months gap happened in exams. So if you complete the training today and for next 3 months you do not give the exam, your passing probability reduces, because after 3 months you will not be able to recall what you did in last 6 days of classes. So my humble advice would be, whenever you finish your training 50 hours, in next 15 to 20 days, give one exam mandatory. If you give exam within very near to your exam training completion date, your passing probability becomes higher. That is one of the thought process. Rest you, the more you delay, it will have a more impact. Now, I can guarantee you all are sitting at 55 marks. So if you have to give exam tomorrow, 55 marks you all can get even without studying, because we all are practically working, we all are professionals, so we have background knowledge, and 55 marks is not an issue. The problem comes to cross the bridge from 55 to 60. So passing percentage is 60, and that's where a challenge happens. And the more over why the challenge is more, because we have a negative marking. So in case of a negative marking, it causes a lot of trouble for us. If you take these 6 days sincerely, and along with the 6 days work on the topics, I can guarantee you can pass the exam soon. That is not a challenge. And we all need evidences to show. So just to give you some evidences, one of the gentlemen from Coimbatore, he is 68-year-old chartered accountant. He did not study FM at all. He does not know what was FM, because when he became CA, FM was not there in syllabus. But still he cleared in first attempt because his knowledge of other laws, because he was IP, he was knowledge of Companies Act, knowledge of basic RBI, FEMA was strong. So he was able to pass the exam based on other laws, even though his FM was not strong. One gentleman just gave exam in first attempt, he secured 76%. Now I cleared exam in 2 attempts. In first attempt I secured 59.75. I was just near the finish line, and one negative marking make my question wrong, so I scored less than 60. So I was failed on first attempt. In second attempt I secured 76%. What makes a faculty more happy? If any of your participants scores more than you, that will actually give the real satisfaction to a faculty. Now this slide is most important. So one of my faculty passed, one of my student passed with around 80 marks. See what he's trying to say. Cleared exam with 80 marks in first attempt, but I must say many questions were absurd. Why somebody is saying many questions are absurd? Because as a professional, if you think they ask such a illogical question in exam, because you will prepare so much for the laws, but then they ask such question you could not ever imagine. Then what he's saying, besides studies, your general awareness and ability to guess also counts. So if you are regular aware of reading newspapers, economic laws, economic newses, you might know something. They ask such a question in exam which you should know, but because they expect a professional should know. So that's why it's very important to have your knowledge, common approaches. So, and I, on a jokingly, I always say exam papers look like this. This is MCQ. Question will look very simple, but answers are as confusing as it can be. And that is the reason I said why the examination percentage is 15%. Not because paper is too technical, because in exam, the just a second. Because in exam, what happens in exam, the question looks so simple, but in the simple questions, answers are so confusing. Answers are so confusing that you're not able to choose the right answers. So we'll just take few examples how have come in exam. Can you all answer this in chat quickly? Now, if you say that I'm giving an exam of valuation and they are asking such a logical, so these are the absurd questions which come in exam. So quickly answer this in your chat box. who is responding from 100, my suggestion would be to put your legal name, because your attendance will be an issue, because RVO need to give a attendance list. So in that case, 100 will not get a. No, sir, I agree. Vijayalakshmi ji, if you can change a setting, maybe later on you can change your setting so that it will help you to get attendance properly in case of any issue with IBBI. Sort of, we got 1, 2, 3, 4 responses. Okay. Anybody? Yeah, everybody need to give a response. Everybody need to give a response. Your attendance will be counted only those who give response. Right or wrong does not matter. Responses matter. I think everybody responded, or anybody left. Manmohan ji responded. Manmohan ji did not respond. Sir, आपका response बाकी है मनमोहन sir. अक्कड़ बक्कड़ बम्बे वो करके किसी को भी choose कर लीजिए. Choose anyone which you like. But response is important. Now understand one simple thing. This question is tough. May be or may not be. So generally we will assume it is not tough because we all are commerce student. We all would have gone through this. Okay. Now D cannot be the answer for sure. Now why D option cannot be the answer? Understand why D cannot be the answer. D cannot be the answer because remember your 11th class or whenever you read commerce first golden rule was accounts are of 3 natures. Every account will have a 3 nature: personal, nominal, real. Agree? So if there is a share application account, it has to be one of the 3 natures: A, B, C. Some nature will be there. So D cannot be the answer for sure. If D cannot be the answer, then what is the nature of nominal? Nature of nominal is, what was the golden rule of nominal account? Anybody can tell me what was the golden rule of nominal account?
Debit all expenses and losses, credit all gains and incomes.
Okay, so we are very clear on the basic. Correct. So our basic is clear. Now, if we know that this rule is there, debit all expenses and losses and credit all gains and income, will share application be considered into nominal? Yes, no, maybe. Is it a expense or it is a gain?
I think no.
It is no. So nominal will be out. So A is also out and D is also out. Now this is the point which I am trying to bring home. Exam question may come as simple as it can be, yet very confusing. And here I am not testing anybody's knowledge. And let me give you a very honest fact. When this question came to my exam, if this question actually came in my exam, and a lot of my friends were giving exam, I also gave a wrong answer. Because this is very 10, 20 years old subject, we don't recall. So I gave the answer real account, which was the incorrect answer. The correct answer is personal account. And why personal account is the correct answer? Imagine share application will be made from which thing? Applications received from individuals or persons who is given. So we will have a name A, B, C, D. They have given application. You are taking that application and making it as a collective share application account. So it will be a personal account. So in exam, now what happens in the exam? You give an answer to a correct question, you will get 1 marks. You give a wrong answer, you will get 0.25. So this 0.25 and 25% negative marking, that makes a lot of problem, because if you do 60 questions correctly and 5 questions incorrectly, you go below 58 or 57.5. So you need to be very careful. So personal is the correct answer. No, sir, nominal is not the correct answer. Personal is the correct answer. Why nominal is not the correct answer, as we discussed? Because nominal account is only for expenses and incomes. So share application is neither expense nor income. So it is a personal account, because you make applications from individuals or persons who receive. So it's a personal account. Answer this question also again quickly. Nobody with A and D, that's for sure. A and D cannot be the answer. Maybe. Now, this question may look very simple and may look a little bit confused. We all know answer A and D cannot be there. It can only go between B and C. Now, the issue is, if I follow old accounting standards, then the answer is equity. If I follow old accounting standards. But now, in the new Indian accounting standards, Ind AS, which we say, in the new Ind AS, this is considered as a liability, because I know from since inception we are knowing that preference and equity are a part of share capital. They are considered as equity. Preference share was a considered equity. But now in Ind AS, it has been decided that if it is a redeemable preference shares where you know that you need to pay it, so it is considered as substance over form. So substance is, if I need to pay something after some period, it is considered as a loan for an entity. But if I am considering it as a non-redeemable, irredeemable, which we cannot issue now, then it becomes a equity. So it is a preference shares, redeemable. Now you will ask, how do I know? Should I consume old standards, because that is also applicable in India as of now, or should I assume new standards? What should be the logic? The logic is, in your syllabus you have Indian accounting standards considering of 5 marks. So for you, we need to assume that questions are coming on the basis of Ind AS. That is the logic we need to take. Now, this is just a gist of your syllabus. Your syllabus, if you can see, we have, it includes, your syllabus includes macroeconomics, financial statement analysis, professional business ethics, general laws, 18 marks, Ind AS 5 marks. Ind AS is very important. This 5 marks can be very easy for you. Overview of valuations, valuation approaches, theoretical valuation applications. This will be a topic. Valuation application will be a topic where you might find little bit struggle, because a lot of you would be doing for first time. For you, it will be, because here actual complications and calculations will be involved. Judicial pronouncement, case law is very simple, 2 marks theory, and case studies. Have you, having reviewed the syllabus on an overview, quick overview, how much do you think practical questions will come and how much you think theoretical questions will come out of 100 marks? Suppose in 100 marks exam, how much you think that my practical questions numberings will come this much percentage and theoretical will come this much? Any idea? Any guesswork you have? कितना एग्जाम में प्रैक्टिकल क्वेश्चंस करना पड़ेगा, कितना थ्योरेटिकल करना पड़ेगा? So it is the other way around, Shalini ji. 75% will be theoretical, only 25% will be practical. When I say theoretical, practical means in 25%, only 25 marks maximum. It ranges from 20 to 25 maximum, where you actually need to take a calculator or do some working in Excel. Rest 75% will be pure question on MCQ based. All are MCQs still. Rest 75 will be purely theory. So they will ask simple questions which have MCQs. You just need to think. There is no manual calculation involved. Just like we did last 2 questions, no manual calculation, but all theory. So similarly for each topics. So let's say for example, Indian accounting standard, they will not ask a theoretical question. They'll just ask they will ask only a theoretical question, that this standard is applicable to what is said under this standard. So basics will be asked. So we need to read basics. Even if you're not good at numbers, even if you're not good at financial management, FM, no need to worry. Exam can still be cleared provided you are good with theory other part. And on the last day, we have requested Vijayji to have a feedback session from all the participants who have recently given exams, because in last 5 or 6 batches, so many people have given exam in last 1 month, and a lot of people have cleared. I think 6 or 7 people have cleared recently from this RVO. So they will be able to give you actual real life examples and real life experience, that what should be prepared more and how should you approach the exam. Because what is the ultimate objective? Knowledge taking is one of the objectives. Along with knowledge, we want to clear this exam. Both should go hand in hand, right? It does not make sense to only have knowledge and do not pass the exam, or vice versa, pass the exam and do not have knowledge. Both will not suffice. So now let us understand some basics, and whenever you have any doubts, anything, please feel free to interrupt. or because I may not see a chat, so you unmute yourself and let me know. So starting from the basics, this valuation rules came in 2017. Companies Act 2013 made a provision in 2013 year that we will have a registered valuer in our place. That section was intended in 2013. It took 4 years to the ministry to make a rules, and we should be thankful to Insolvency and Bankruptcy Board. Had they would not have launched IBC, we could not have even seen registered valuer in 2020 also. It would have taken another 10 years from ministry to finalize the rule, because there was a tussle going between all professional institutes that who should be allotted a registered valuation degree. It should be CA, CS, ICWA, MBA, lawyers, engineers, architects. Everybody was wanting to their claim. So it was taking a long time, but IBC mandated MCA that issue a registered valuation rules quickly. So they started in 2017. Now, as of now, IBBI is our regulatory authority. Insolvency and Bankruptcy Board of India controls. They regulates insolvency professional and valuation profession. In coming years, maybe 1, 2, or 3 years, this role will be taken from IBBI and will be given to some another agency. It is under the process. IBBI handles RVOs and RVs. RVOs are registered value organizations. So anybody can form an RVO. Suppose today I want to start a education institute and a non-profitable organization. I can open an RVO, take the license from IBBI. I can conduct a 50 hours training, educate the members, and then they will become registered valuers once they pass the exam. So RVOs can be opened by anybody. Registered valuers will be individuals or entities. We need to first register with RVOs, then our registration goes to IBBI. So our first layer will be always RVOs, then RVOs handle to IBBI. Directly, I will not interact with IBBI. There are 3 asset classes specified by IBBI: securities or financial assets, for which we are doing this course; CA, CS, ICWA, and MBA who has done in finance background, they can only register in SFA. There are other 2 classes, plant and machinery and land and building. Only people who have the technical skills of engineering or other diploma in other courses, they can become the land and plant and machinery valuers. Having understood these 3 asset classes, who will value inventory? Which asset class will value inventory? Any idea? So you are doing a insolvency case or you are doing a normal case. Yeah, ICW becomes CMA. Yes. So which asset class does the inventory valuation? SFA. What about others' view? So this question was asked to IBBI that who will do exactly depends on the nature of inventory. If you are doing a valuation of a company which is a real estate company and their inventory is only real estate, it can be done only by land and building valuer. If your company is which makes only heavy machines, which is the valuation inventory is only of machines, technical machines, then the SFA cannot do a valuation. Then it will be done by plant and machinery. So this question was asked to IBBI that you direct who should do it. So IBBI says we cannot give a guidelines who should do what, but what open guideline they have given IBBI, it should be seen which the nature of inventory is closest to which asset class, then that asset class will do. So if it is closest to land and building, it will be done by land and building. If it is closest to plant and machinery, it will be done by plant and machinery. Whatever is remaining will all go to SFA. So SFA is a residual category. If anything cannot be directly linked with land and building or plant and machinery, it will go to SFA. So SFA has a huge responsibility in doing inventory valuation, and this question comes mostly in case of IBC cases. Suppose you are doing a valuation, you become registered valuers, and the company has only diamonds as an inventory. It's a jewelry company. Now, which asset class will value diamond? Plant and machinery cannot do diamond, it does not directly go. Land and building cannot do diamond, it also does not do. Then it goes to SFA. Do SFA valuers have the capability to value diamonds? Yes, it will go to SFA valuers. My question is, do SFA valuers have the capability to value diamonds? Right. So generally, SFA valuers do not have the capability. Okay, and since my wife is also doing this course, so I jokingly used to say, you may have the capability to value, because normally females have the capability to value diamond and gold much better. So I said you may have the capability, but at least male valuers may not have the capability. Now I need to do assignment, and I do not have the capability. Then what should I do? And this is actually real cases. So this actually happens in a lot of insolvency cases this year. So I need to rely on the expert. Absolutely responded by Purushottamji. So I will go to an expert. Now expert will be, since IBBI do not have any expert asset class, so I will go to somebody who is recognized in any of the government body. So I will go to somebody who is practicing as a income tax registered valuer of gold or diamond, or customs or wealth tax. I will take this opinion. So I have taken an expert opinion, and he has given me a value. Your jewelry is, let's say, 1 lakh rupees. Diamond is a 1 lakh rupees. He has given me this value. I have taken this value in my report and put it. Later on, it was found that the valuer has given a wrong report. The value should have been 10 lakh rupees. There was one typo error from his report. Instead of putting 1 comma, he put 1 decimal more. Now the value was 10 lakh rupees, but we reported 1 lakh rupees. Now my question is, am I responsible for the error in my report, or I am not responsible at all? What is your review? Can somebody? Yeah, that's what I'm asking, sir. That's my question. Am I liable for the error made by other expert in my report? Yes, no, maybe. What do you think? Does any liability falls on me? Because ultimately I have signed the report, and while signing the report, I have given a remark that I'm relying on the work of expert, or expert has given me a report, since I don't have the technical capability. Error was done by the valuer of poor diamond. Report I have issued. Till 2017, before the rules came, I was not responsible till 2017, because we always give a caveat that this work is out of my scope, but then I'm not responsible. But after 2017, in the valuation rules, even if you take separate valuation reports, or even if you take that, because in IBBI only report from these 3 asset class values will go. So I need to take that report and put that number in my report. That is the unfortunate part. In 2017, when the valuation rules came, they have made very clear the person issuing the report will be liable, and you cannot disclaim or disown your responsibility saying, I have relied on the report of expert, so if something goes wrong, I am not responsible. So ultimate responsibility will be yours, along with the other valuers who is a expert. So you cannot escape from your responsibility. That's why now it has become more challenging for us as a valuer. A lot of developments happened recently, which I will probably discuss at the end of the day. How it can be cross-checked? So they say you need to have done a sensitivity analysis, or you should have you should have discussed with the management. So suppose a valuer is giving a value 1 lakh, does the management agrees with that value? Because normally in cases of IBC or other cases, management knows more than the valuers. So it is generally assumed that those who are doing business, they actually know more than the valuer, because valuer may be a theoretical person, but the person who is doing actually business may know that. There can be 2 reports, there may not be 2 reports. Why people do not go for 2 reports? Because of cost effective. Because if I tell the client that I need to have 2 reports, he will say I will get it from other valuer who will take only 1 report. So that is the reason people avoid taking 2 reports. That's the general practice. Why in IBC? We'll discuss this concept of 2 reports in next 20 minutes shortly. As of now, we have 14 RVOs. So these all RVOs have equal standing. All RVOs are equal in front of IBBI. They have equal weightage. RVO has a choice. Would they like to register in all 3 asset classes, or they like to do only in one asset class? For example, if you see RVO number 6, 8, 9 have only and 10 have not registered in all 3 asset classes. They only registered in respective asset classes. But if you see all other RVOs, they have registered in all 3 asset classes. So it's their choice. So just like Vijayji's RVO has done batches of land and building and plant and machinery, it depends on where you want to give your services and education. Any RVO has to be a Section 8 company mandatory. Section 8 company is a non-profit organization as per Companies Act 2013. Earlier, before 2019, the rule was anybody can open an RVO. It can be a trust, it can be an NGO, it can be a charitable society, it can be any non-profit organization. Anybody can open it. Now it is mandatory. Only Section 8 company can be a NGO, can be an RVO. You have to appoint independent directors. That should be majority. You cannot have your own employees. 4 committees are mandatory in RVO. Mandatory to have 4 committees. More than 50% should be resident directors also, and chairman of all committees should be independent director. Any idea what are the 4 committees? If you can think of, or we can probably ignore because we have not gone through the rules. My mistake was I should have given the rules PDF should have yesterday, so we could have at least gone through. So in exam, a question comes generally: what are the mandatory committees or what are the optional committees? So we should be aware what are the committees. We'll go in the rules and know what are the committees. The job of a RVO would be to conduct a 50 hours training. Then the student participants give exam, pass the exam, and then you register with RVO. After clearing the exam again, you again fill a form to become a registered valuer. Then RVO will send that form to IPBI, and after that, you are get registered with IPBI. Then you need to do 1-day training, post qualification certificate of practice. Now we need valuations for all reasons, whether you do M&A, you do fundraising, you do sales of business, any investments you buy and sell, or for dispute resolutions. Any transaction you do, generally valuation is required, whether by a registered valuer or by any other valuer. Valuation is preferred always. Regulatory, Companies Act mandates now it should be registered valuer only. Income Tax Act, it is as of now only chartered accountant and merchant bankers. In Income Tax Act, registered valuer does not stand hold. SEBI, in some places they recently allowed registered valuers. Still, merchant bankers and CAs are there, and CMAs, cost accountants are there in SEBI and RBI. Similarly, with RBI and FEMA, a certificate can be issued by a practicing CA or practicing cost accountant or by merchant bankers. Company secretaries do not have authority in FEMA and RBI as of now. In IBC, mandatory registered valuers, nobody else. In court litigations also nowadays, registered valuer degrees, certificates are required for valuation of properties and all. And financial reportings, you do Ind AS, you do ESOPs, you do purchase price allocation, impairment. You need to have a valuation done from a registered valuer, and this is a huge area. So as one of our participants is in from ESOP, so every year you need to have a ESOP valuation done for reporting purpose. So this becomes a recurring assignment, and at the time of issue in ESOP, we need 2 valuation reports. One, at the time of issue of grant, when you're issuing the ESOPs, at the time of grant, you get a valuation from a registered valuer. Second, at the time of actual exercise of option, you get a valuation done from merchant banker. But during the period of ESOPs, generally the registered valuer gives a year-end valuation that what would be the value as per the value of options. So it's a recurring assignment for listed companies or for companies which follow Ind AS. So that can be one of the areas to look into. So why we need a valuation? So it is always better to be roughly right than precisely wrong. Your valuation, whenever we do a valuation of any asset or any liability or any entity, we do not guarantee that will be the actual price where transaction will happen. Is valuation a certificate or it is an opinion? What is the valuation? Are we giving a certificate or are we giving opinion? So we are never giving a certificate. We are giving an opinion. Valuation is opinion that in my view, based on my experience, based on my understanding, I think I give this should be the fair value. But that does not mean your transaction will actually happen that. So why valuation is done? Valuation will always give you a benchmark, a number to start negotiation. Suppose if I want to buy a building, I will get a valuation done from a valuer. Valuer will say, to me, the building look worth 5 lakh rupees, let's say. So I know the 5 lakh is a reasonable amount. So I will go to the valuer, go to the seller and say, I want to buy at 4 lakh rupees. Because I know even if he goes from 4 to 5, 5 is a reasonable number because that's what the value my consultant would have given. Similarly, seller would have also got a valuation done. He would have got a value, let's say 6. Somebody would have gone given a value of 6 lakhs to him because the value changes from seller to buyer. So he may quote 7 lakh rupees saying that I know even if he discounts, if I go up to 6 lakh, that is what I should look for. That's what the valuation is for. And then whoever has the better negotiation skills will bring down to his number. So valuation is always taken just to get an benchmark idea. It may not be exactly number. It cannot be challenged. Now, since 2017, when the rules came, a lot of issues, a lot of confusion happened in the market. And why the confusion happened? Because earlier, before 2017, only one certificate of CA of valuation could go into all other law. You take into FEMA, take into SEBI, take into RBI, take into Companies Act, take into Income Tax Act. That certificate hold good. But now, post valuation rules of 2017, the different acts we needed different valuation certificate from a different person. That causes a lot of confusion. Now, what is the biggest confusion as of now, and which is biggest challenge? If I want to issue a shares of a company, let's say which is 5 years old company or 10 years old company, and I want to issue at a DCF method, discounted cash flow. Okay, there is a company, 5 years old company, and I want to issue and I want to issue shares at a discounted cash flow method. Any idea how many valuation certificates I require, and from whom, and under from what act? Whatever understanding you have of law till now. Any idea where, in which acts I need a certificate and from whom, which all acts? So give you an example, ABC Limited wants to issue shares to new shareholders for on a discounted cash flow premium. So face value is 10 rupees, premium is 90 rupees. So I want to issue it 100 rupees. So according to you, in how many acts I need a certificate? Which act and who should give it? Any idea? Little bit basic idea. Under Companies Act by registered valuers, assuming it is a private company, assuming it is not as so under Companies Act it is by under Companies Act it is by registered valuer. Okay. Under Income Tax Act, then who will give? Under Income Tax Act, so under Income Tax Act it is merchant banker. Now imagine a situation of from a client. Now put yourself into the client shoes, and your CA and your consultant comes and tells you that sir, you need to get 2 certificates. For what? For only one transaction. So I'm doing one transaction, that is issue of shares to one person. For that I need 2 certificates, one from registered valuer under Companies Act and one from merchant banker under Income Tax Act. Commercially, does it sound logical? Commercially, it does not sound logical. For one certificate, one transaction, you are asking 2. Apart from the commercial fact, now, do you think both the valuers, merchant banker and registered valuer, will give the same value? Can it happen? Both will give you same value. In the rarest of the rarest reason, they cannot give a same value until unless they are Siamese twins, where both things alike, which is very rare. So generally, it cannot happen that 2 values will give same value. Now, what actually happens with the client? If a CA, a registered valuer, goes to client and say, "Sir, your fair value is 100 rupees as per my valuation," and the merchant banker says, "So no, as per my merchant banker, your fair value is 120 rupees," or vice versa. Both numbers can vary. Then client is in a fix. Should I consider my value as per given by Companies Act value, or should I value as per income tax? So as a client, would you like to have two different values or you prefer one value? Common sense wise, every client will prefer one value to avoid any altercation later with any of the law. So he says, let me get a value which is nearby in the both the merchant banker and registered valuer. So this is the practical difficulty. So practically it is a lot of difficulty for profession. This difficulty will remain, I think, only for few more months, or I will say few more years. Months is what I am hoping for, because in future a new law is getting proposed where it will be mentioned that only registered valuer certificate will be accepted in all other laws. Once that get passed, it's a huge opportunity. The bill is under process. I will touch base on the bill also shortly. So practically now we have this is the issue. So how does a client resolve in practically? So client will go to any registered valuer and say, I can give you this assignment to you only if you ensure me that you will get any tab with merchant banker who will issue a certificate near to your report, then you take this assignment. So or it goes to vice versa, or he will go to merchant banker and say you need to go and tie up with a registered valuer. So now to grow your practice, once you become registered valuer, to grow your practice, you need to have a tie-up with two important persons. One is merchant bankers. Second is insolvency professionals. And why insolvency professionals, that we'll understand shortly. Now, valuation rules, which is very important for us to understand. Section, under which section Companies Act talks about valuation, registered valuer? In exam, they ask such a simple and basic questions. Under which chapter, under which section of Companies Act, registered valuer is defined? Any idea? I'll give you four options: 246, 247, 248, 249. Companies Act sections. Which section talks about registered valuer? Any thought process? Out of four options, if you can think which one. Any section, if you can recall, which section talks about 249? And we should know this section, because at least I know this section. I need to know this section, because I always say is that this gives us bread and butter for valuers. This section we should know. So this is section 247. So Companies Act was amended in 2013, and later it got amended again in October because of the rules. So now registered valuer becomes mandatory in February 2019 onwards. Whatever valuation happen in Companies Act will happen only by registered valuers. So section 247 gives the birth to a registered valuer profession. And in Companies Act, this is the only one section that talks about what is registered valuer, who should be registered valuer, and what should be the authority and what should be the responsibility. So just recall section 247 talks about registered valuation, and just note it down before going for exam. You need to read section 247 thoroughly once before going for exam, mandatory. Can you answer this question without? I know I have not even taught section 247, but even without being taught, what do you think can be the answer? Who appoints registered valuers under Companies Act? A, B, C, D. BOD, BOD. Nobody is going with C. So C, as for sure, we are discounting C. And we know there is no official valuation committee of the board. There is no such committee generally. So C and D are ruled out. Only A and B are option. So we got only one answer who said A. Rest all are said B. So correct answer is A. Now why correct answer is A and why not B? So generally in Companies Act, we always understand in Companies Act, audit committee always recommends and board always appoints. This is the general presumption. Only in section 247. Only in section 240. No. Shalini ji. Audit committee does not recommend in this section. Only in section 247, audit committee has given the supreme power to appoint, and in case audit committee is not there, then the board appoints. So assuming a scenario where we have an audit committee and we have a board in a listed company or a public company, appointment will be done only by audit committee. It does not goes to the board. So that is one of the exceptional sections, so which is against, because generally in all sections you will see audit committee recommends and the board appoints. But here audit committee appoints, and if you do not have audit committee, then the power goes to the board. So the question is, who ordinarily appoints? Now this is the reason why section 247 or anything needs to be read in a very sincere manner, because generally in the back of the mind we will always think the board appoints. But now if we miss to read this section properly, our answer goes wrong for a very simple question, which can be a negative marking issue. So let us, so what are the generally question comes under section 247, generally questions. First, who appoints registered valuer? So we now understand it is the audit committee. And if it is not audit committee, then it goes to the board. Under which chapter number section 247 comes? Now these are called the absurd questions. So in Companies Act, there are chapters number, chapter number 1, 2, 3, 4 till 21, 22, 23. So many chapter numbers are there. Now, this is actually absurd to ask any professional in exam under which chapter number this section is there. But unfortunately, 2 or 3 marks questions will come like this, which are absurd. So, but that's what it is. That's why if you read section 247, we'll be able to clear. Any idea under which chapter number it comes? Chapter 15, 16, 17, 18. 4 options I'm giving you. What do you think under which chapter it should come? And I know these are memory based questions, not relevant, but actually it comes. And so always write in Romans. That will be good for you to remember in exam. It is chapter 17. So in exam, always write in Romans. So it is chapter 17. Now, the rest of questions I will take you once to take you to the rules. Now, what does section 247 says? It says the Companies Act under chapter 17, the registered valuation, whenever any valuation is to be done in respect of property, stock, shares, debentures, security, goodwill, or any other assets, or you need to do a valuation of liabilities or net worth of a company, it should be done by a person qualified in such a manner as prescribed and appointed by audit committee, or in its absence by board of directors of that company. So it has to be a registered valuer who has qualified the valuation rules and other exams, and then it can be appointed by AC, or if it is not audit committee, then board. So that is the registered valuer. Now, what are the responsibilities and what are the implications? So the duty is that he should be a independent valuer. He should have exercised due diligence. He should have made the valuation in as per the manner. These are all everybody understands. The only difference between in India and here we say exercise due diligence. That means, okay, when you are doing valuation, you exercise your due diligence. Globally, the word is you do an investigation. That is a global word. Now, the last point makes a little bit complicated, and this is very confusing and this is very challenging. It says the valuer should not take valuation of an assets in which he has direct or indirect interest within 3 years before or 3 years after the valuation of assets. So what does it mean? If I had taken a valuation of any asset today, if I did a valuation of any company today, in next 3 years, I cannot be its auditor. I cannot take any other services with him. Or if I had done a audit of a company 2 years back or 3 years back, I did any company, then I cannot do a valuation today because it is assumed that I have an indirect interest. Or let's say my wife has shares of a company, or let's say we are having a regular business transaction. In that scenario, I cannot do a valuation. I can only do continuous valuations. It can, yes, shareholder is considered interest. Yes, sir. I cannot do, I can do a valuation 10 times in a year. For example, I can do a valuation this year 4 times I can do a valuation, next year also. So valuation will not be considered as a direct or indirect interest, but it is for the other things. So if I am a company secretarial auditor, I cannot do. If I am a stat auditor, I cannot do. If I am a tax auditor, I cannot do. If I am a GST auditor, I cannot do. So the objective what IBB has given here is, first thing, whether your independence is getting influenced. Second, are you independent as per section 133 and 141 of Appointment of Companies Act? If you clear that guidelines, then you are allowed to take that. So IBBI has not given more details on this, nor companies that have given more detail on this section. So 3 years before and 3 years after caused a lot of challenges. Earlier, if you see the first draft, the rules was never in the past, never in the future. Like if I did a valuation today, in future I can never be associated, or if in the past I did something, I can never do valuation. But this was removed. They say 3 years is a good time to take care of influence. Now, why they put this condition? Suppose I did a valuation of a company today, and the value is coming, let's say 500 rupees. Company says I need a valuation of 1000 rupees to give it to my shareholders or to get investors. If you do a valuation of 1000 rupees, I will give you next year my audits and next year my other assignments for your benefit. A valuer may fall for a trap, and in the future of taking future assignments may compromise on the valuation principles. So this is just to avoid that you are not getting influenced by the valuers, by the client, and by the other persons. That's why they put this. Suppose I did an audit last year and I find out some errors. So client may say, if you drop these points, I will give you valuation assignments next year. Because at times you'll be surprised to know the fees of valuation assignments are much higher than they're doing a fees of audit. So auditor may also sabotage the audit principles. So it is a very controversial and very questionable issue, and everyone has to take, before taking assignment, need to see whether you can justify this clause or not. Now, with great power comes great responsibilities. I think this was told in by Superman, or which famous movie this was a dialogue, that every power comes with responsibility, and with a great power comes great responsibility, and with a great responsibility comes great penalties. So this section puts very heavy penalties. The penalties are, if you have done anything contravention of section 247, and intention is not to defraud, it's a genuine error, genuine mistake, then your penalty ranges between 25,000 to lakh rupees. So for your exam purpose, it will be, penalty amount will be 25,000 to lakh rupees. Last month, this got amended. Now they have fixed up to 50,000 rupees fix. Now this 50,000 rupees is a flat penalty under section 247, where my intention is not to defraud. But for your exam purpose, because the amendment happened recently, it is not applicable for your exam. You need to follow 25,000 to lakh rupees if the intention is not to defraud. But if the intention is to defraud, then it goes from 1 lakh rupees to 5 lakh rupees, and along with the imprisonment of 1 year. This is just a starting. There are more penalties. You need to refund the remuneration you receive to the company. You need to pay for the damages, whatever the person has suffered loss. You need to have more responsibilities, more penalties against under that. Any idea under section 448 and 469, what can be the maximum jail term if it is proven that I have done a valuation fraudulently with the management to defraud the shareholders or minority shareholders? If it is proven that intentionally I'm doing wrong, what can be the maximum jail term offered? Can be given maximum jail term? Any idea? Minimum is 6 months. What can be the maximum jail term? Anybody can mention? If you just double what Mr. Arun has said, it is 10 years. So 10 years section, if you go to section 448, where it is proven that you have done fraud and all, penalty goes up to jail term up to 10 years, where it is proven that you have intentionally done a fraud colliding with the management to defraud the parties. So so why they put so stringent? So that the valuer will be afraid to do a error knowingly. If you do a mistake, it's fine. So there are people who does an error are bound to happen. So if you do some work, there may be a mistake. So for genuine mistakes, IBBI and MCA is not very stringent. But if you are defrauding, then they are very stringent. Is price equals to value? Yes, no, maybe. No. What about others' view? Can price be equal to value? Or let me ask another question. So let me ask another question. Is value equals to price? Yes, no, maybe. Actually, I have not done anything. I have just changed from LHS to RHS. So what was the number in the first equation on the left hand side? I shifted to right hand side. So ideally, if the answer to your first question is no, then second question also goes to the no, because the same principles. Now, what is the main difference between price and value? The main difference between price and value. And in exam, a simple fundamental question comes. What is the main difference between price and value? Main difference. Theoretically, I know we can give huge answers. Fundamentally, what is the main difference between price and value? Don't give me the Warren Buffett quote that price is what you pay, value is what you get. Actually, answer comes from this quote only. So Warren Buffett has given a clear definition between what is the value and price. So he says price is what you pay and value is what you get. And for different person, value may be different for a same asset. And I'm sure if you have seen the movie called Diwar, a very old Amitabh Bachchan's movie, I'm not sure if you have recalled that movie. Amitabh Bachchan went to buy a house, a building from a person, and the seller was selling a building, and seller says, seller sold the building at 10 lakh rupees to Amitabh Bachchan and says that when he was handing over the property papers, seller says to the Amitabh Bachchan that Mr. Vijay, you are an idiot. You don't know how to do a business. Even if you had asked 2-3 lakh rupees less discount from me, I could have done a discount of 2-3 lakh rupees and would have sold the building lesser than 7-8 lakh rupees to you. Then Amitabh Bachchan responded that Mr. Dhandania, you don't know how to do a business. Even if you had asked 10 lakh rupees more for the building, I would have bought this building at 20 lakh rupees. Now the seller got confused that what is the value he is seeing. When the seller is saying, I think the value is 7 lakh rupees, and the buyer is saying, I can buy 20 lakh rupees. So he got confused on his own decision. Then Amitabh Bachchan says that because when the building was under construction, my mother laid the bricks and the foundation of this building. So today is her birthday. So I want to buy this building as a gift to her. So for me, the price is much more. So value will always differ from the buyer's perspective, and seller will always have different value. Fundamentally, what is the difference? Price is always known as an entry price, where you enter. Value is always an exit price. If I bought something at, let's say, 10 rupees today, this is the price. I bought something at 10 rupees today. But can I exit at 10 rupees, 11 rupees, 12 rupees? If I can exit at 12 rupees, my value will be 12 rupees. If I exit at 8 rupees, my value will be 8 rupees. Suppose I bought something today, let's say uh, I bought any product at 10 rupees. And the government say, and the new, let's say I bought iPhone 10 at 1 lakh rupees. And after buying iPhone at 1 lakh rupees, a 10 model, 12 model was launched next day. Now next day 12 model is coming at 1 lakh 10,000 rupees. Will I be able to get 1 lakh rupees for the 10 model? Now nobody will give me that same value. So values are always exit price. So price can always be measured. Price is exact. Value is always subjective. Value you cannot measure. You just give an opinion, because price is always a transaction which already happened, and value is a transaction which you presume to happen. So there is an assumption in a value, and in the price there is no presumption. Price you can always fix that yes, this is a transaction happened at this price. And why this price will come to you relevant in Ind AS 113. When you go through 113 tomorrow, simple question comes on price, which you should be aware that tomorrow will be covered. Now we'll discuss on value, how value is coming. So just give you a broad overview. A basic definition of valuation is it's a basic. Valuation is the process of determining economic worth of an asset or liability under certain assumptions and limiting conditions, subject to data available for the valuation date. Just read this definition for a second. Just go through, try to submerge. Then I'll ask few questions. Now, can you tell me what do you mean by valuation date? Yes, PPT should be shared. I think after the end of the session, they will share all PPTs. PDF I already shared for the valuation rules. This PPT will be shared after the session. because everything should be shared because I've cleared the exam, I've passed the exam. Now this PPT should be for the people who are attending and they should pass the exam. So everybody, don't worry on the of any data. More than PPT, whatever else we can share, everything will be shared. Coming to a question, what do you mean by valuation date? I think valuation date is a very simple concept. I'm sure we all are aware. So valuation date is the date for which I'm doing a valuation. So if I want to issue a valuation date a report over 31st March, I can do it today. So valuation date will be the date on which I'm valuing the asset specific. It is a specific date, but the valuation report date can be the date on which I'm actually issuing the report. So there can be a difference between a valuation date and a valuation report date, and there will always be a difference. There should always be a difference. Can I do a valuation of 31st 1st April 2019 today and give a valuation report today? Possible? Yes, no, maybe. I want to value the assets of 1st April 2019 and give a valuation report today. Allowed, not allowed? So there is no bar how much difference you have from your valuation date and valuation report date. Because for various law purpose, let's say your merger will happen approved today. Merger will happen on 1st April 2019. So it is almost 1.5 years past. Still, I need to issue a valuation report for 1st April 2019 for your PPA purpose, for your goodwill allocation purpose. So their valuation date can be as old as it can be, but the valuation report date always should be current. So I should not give a backdated report because earlier people used to give backdated report, but for your benefit, never give backdated report. Now, suppose assumingly my valuation date is day before yesterday. I'm valuing a land and building. Let's say I'm valuing a building. My valuation report date is yesterday. So yesterday I had issued a report of a value of a building that this building is, let's say, 10 lakh rupees worth. Today morning a fire occurred or an earthquake came or that building got damaged. Suppose a fire occurred and the entire building got damaged. Now, is it my responsibility to issue any addendum report? Because yesterday I issued a report that the building valuation is 10 lakh rupees and today morning the dynamics got changed. Am I responsible for any changes, for any issuing any addendum on a conservative basis or on a professional basis? No. So you all are right. There is no responsibility casted on me to issue any addendum report because my report is at a specific point of time. My report can't keep on changing or my responsibility can't keep on going after each pay. Once I issued a report and once the report is delivered, I have no responsibility to update. That is not my impact. This actually happened a lot in COVID period. A lot of people have given a valuation of startups in January, in mid-February. The valuation came very high. But suddenly when then March COVID happened, all startup valuation almost went almost half, more than half. And I'm sure we all are aware of WeWork valuation. If you have seen WeWork valuation, the co-working space company, their valuation came $47 billion and now it came to $2.1 billion. So sudden drastic valuation drop has happened significantly. So as a valuer, it is not my responsibility to update my report that 2 months back what I gave report and now what I changed. Circumstances I'm not supposed to mandate. What is value? Till 2000 till 2020. So IVS, what we'll discuss what is IVS later on, but understand we always go by definitions. So the word value was not defined anywhere earlier in the sacred text of valuation standards. It was not defined what is value. Whatever the general English terms, we understand that. But in 2020, they defined what is the term value in the standards. So now the value means judgment of the valuer of the estimated amount considering the base of value. That is just a overview to give you. What do you mean by value? So value is a judgment. So it is not a certificate, it is an opinion. Now, what is valuation? Even that is also not defined. What is valuation? So valuation was defined again in 2020 standards recently on 1st February. They say valuation refers to an act or process of determining an estimate of value for asset or liability by applying standards. What do you mean by act and process? Just to tell you, so in process means you do a process. For example, you are doing a valuation as per the DCF methodology, where you are taking 5 years projections. So you are following a process. You are taking 5 years projections, you are verifying the projections, you are applying discount rate. So it's a process. What do you mean by act? Act means you are simply taking. For example, somebody tells you to give me a valuation of a listed company. So I have investments, value my investment. So for a listed company, will you do a valuation or straight away take the BSC or Sensex numbers? So if it's a listed company, I'm not doing a process. It's just the act of taking a number from one exchange and multiplying that. So that is a valuation for a listed company. So this is not for your exam purpose, just to give an overview picture where the things are getting deriving. This will be helpful once you become registered valuers to understand. I have not even told you what is IVS and all. I will just explain you later shortly. Is valuation art or science? What is the view? And whenever you need a break, let me know, because as per the schedule, there is no break. As per the comfort of the participants, whenever you need a break, you can let me know. So when I was in school, the question was always, is accountancy is an art or science? That question was always used to ask, and our professor used to always tell. So the accountancy is a science. If you tally, or if your trial balance tallies automatically, it is a science. But if you manually tally your trial balance, then it's an art. And I'm sure those who are done in old school days, if you do tally, when your trial balance does not tally, you'll try to put difference in somewhere and close the matter. Because in the nowadays in tally, in the automated ledgers, you don't need to do a trial balance tally. But those who've done old school of accounting, when I was doing articleship, tallying trial balance means is a victory. If you tally the trial balance, means you are a smart auditor. Now, valuation is a mix of both, but the dean of valuation, one of the most acclaimed personality on valuation, Professor Ashwath Damodaran, he says neither it is a science nor it is an art. He says it's a craft. That is a skill you will learn only by doing more and more. The more you do, the more you will become better. It is a scientific art because it has certain principles, that there are 3 approaches given, you need to follow those approaches, and but how much you follow and how you modify those approaches is your art. So 2 valuers will value the same asset, but they have a different skill set, different art and science, the answer will come. Even the IBB itself admits that valuation is a quantitative or qualitative process to determine a fair value, and for one person, for one asset, we can have a different value. That is also admitted by IBBI in their committee of experts meeting, that ways we understand, even if a valuer give a different value, we understand it is the same. So there was a cartoon published in one of the newspapers that we appointed 12 financial analysts, and 12 analysts gave 12 different valuation reports for the same company. So 12 people will value, so 12 values will come. But the only common thing was they all charge the same fees. So apart from the fees, everything was different. So the valuation will always different for different purposes in different persons. Now, base of value. So what do you mean by base of value in the international standards? This is not covered on our ICA standards. In the international standards, they have defined the valuation. There can be different meanings of value. It can be a market value, it can be investment value, synergistic value, liquidation value, equitable value, market rent, and fair value. These are few concepts used predominantly in different things. We cannot say fair value and fair market value is same, because there is a different small fine differences, very small differences. First, let us understand what do we mean by market value. So when we say market value, we say market value is estimated amount for which any asset or liability should exchange on a valuation date between a willing buyer and willing seller. Everywhere it should be willing buyer and willing seller in an arm's length transaction, after proper marketing and where parties acted knowledgeably, prudently, and without compulsion. So this is a gross definition of they've given a market value. There is a one difference which causes the entire change between fair value and market value, the word should. When say should exchange means you are giving the exact number. Should means that you are actually saying that yes, this is actual market value. The transaction will actually happen at this place, which is giving a more authority. In fair value, we are not using the word should. We are saying it may or would. That is probability. Here we are giving a confirmation. So market value is more broader concept. Market rent is generally used for lease properties and for land and building valuers. When they are doing a valuation of any property, they do a lease multiple method. So they say how much is the next building will be able to get a rent. So on that basis, they use the word market rent. Equitable value. Equitable value is where we are saying that here that see the difference. Something I think slide is not coming. Something is coming different here. The one word is getting hidden. The word is estimated price for transfer of asset or liability between identified knowledgeable and willing parties. What is the difference between equitable value and market value? Here we are saying identified parties. That means buyer and seller are known. So here it is a specific transaction. In market value, we are open transaction. We are not saying that we know the buyer and seller. Here they are identified. Here I know Mr. A will sell to Mr. B. Parties are identified. Rest other things remain same. Only thing is identified. Investment value is what you have actually given investment. Synergistic value. This is a common sense concept. Synergistic value always means 1 plus 1 can be 2 and 1 plus 1 can be 11. So if if Facebook buys WhatsApp, it may not give a direct business value, but it is a synergistic value because WhatsApp is not a social media like Facebook. If Facebook buys Orkut, we understand it's a different value. But since Facebook knows that the world of the future is in the data and WhatsApp has the maximum data of the world, so they will try to acquire WhatsApp to have a synergistic value. Now, what is synergy? If I acquire something, I may not have direct vertical. I may not be in the same line of business, but I may have a more value. For example, if you see if you see a shopping malls, big shopping malls, if you go to McDonald's, which is on an isolated area, and a McDonald's which is on a shopping mall, the one which is in a shopping mall will have more footfall and more sales, despite the one which is open in a secluded area. Though the product is same, but being the footfall is higher, that's why that will give you a synergistic value. So synergistic values always look into the combination. Now liquidation value. We know when we are not able to run the business and we want to close the business, we cannot. So there are two concerns, two premises: going concern and liquidation. If anything is on a going concern, you'll at least get a fair value. If you know a company is going to shut down, and if you are a buyer, be honest to yourself. The value is of 100 rupees. So let the item is worth 100 rupees, and you know the company is going to shut down anyway. Will you give him 100 rupees, or you will say, okay, give me 80 or 90 rupees? Come into a consumer category. If you are a consumer and I know if I'm a buyer, I know company is going to shut down. Will I offer him 100 or I will offer him something less than 100? Discounted rate. It's a common sense psychology. We'll always know that. So we know that if I'm valuing for a company which is under liquidation, I will not get a fair value. I need to get a discount. Now in liquidation, there are two concepts we need to understand. One, the first concept is the liquidation is an orderly transaction that okay, company says okay, we will close in next 5 years or 1 year. We are not closing due to market conditions. We are closing because we don't want to stay in India. We want to go into another country. We want to exit from India. So there is no pressure for you to close. Only your management decision wants you to close. So you have orderly transaction. You have full time. But suppose you are not able to pay debt and IBC says you need to get closed on in 90 days. So you are a forced transaction. Even if you are in liquidation, depends on two purposes. Whether you are orderly liquidation or forced liquidation, your value will change. It's a common logical concept. And And Ashwat Damodaran says a valuation can be done by any person who has a common sense. It's just common sense. It's like giving the money. So you know what logic you will apply. Even if you don't know, you have not read valuation standards, you can still do a valuation. Apply common sense. Now, last two things which we need to understand. IFRS 13, which is very common, and for you it will be a lot of practical use when you do practical assignments. IFRS 13 says, or Ind AS 113 says, fair value is a price that would be received. So understand the difference between should and would. In the previous, it was saying it should be received. Here it is saying that would be received to sell an asset or pay a transfer a liability in orderly transaction between market participants at a measurement date. So here, there are no identified buyers and sellers, but there are market participants that somebody may buy, somebody may sell at a particular valuation date. So that is a fair value. Fair market value concept is used under OECD transactions, OECD countries, whenever they deal in OECD matters, that a willing buyer would pay to a willing seller in an open market. So this is generally used for international transfer pricing arrangements. This is the definitions. Now, as we discussed, valuation is what people are willing to pay. Your number may give you 100 rupees, but if somebody wants to buy at 1000 rupees, you cannot stop him, right? Because for him the valuation is 1000 rupees. So when we all understand, when we all have probably WhatsApp in our phone, and I'm sure we all have WhatsApp. Did WhatsApp charge you anything to download WhatsApp? $1, $2, $3? Did you all paid anything? At least I did not pay, and I'm sure none of you would have paid anything for WhatsApp. Because had he would have charged money to us, I would have gone to WeWork or would have gone to Hello or Telegram. Because anything which is getting free in market, why should I pay to you? So when we have not paid anything to WhatsApp, so when Facebook acquired, have you any idea how much per user he would have paid to WhatsApp promoters? So let's say when the transaction happened between Facebook and WhatsApp, Facebook acquired WhatsApp number of users. Any idea how much dollar he would have paid per user to WhatsApp? When WhatsApp was not even charging anything to us, WhatsApp has no revenue from users, then how much he would have paid? Any idea, rough number if you can think, per dollar, per user, how much he would have paid? Any vague number you can think of? $1, $2, 50 cents, $5, $10, any vague number? So it was $36 per user. So $36 per user he was giving. Now understand two things. These users are not sure customers. It's not that we have actually bought something from WhatsApp. We are just downloaded. And there is no surety that Facebook has taken us. We might not leave WhatsApp. If I leave WhatsApp and I go to some other, that $36 may go for a waste. But why WhatsApp was acquired? Because majority of the world was downloading WhatsApp for all doing business transactions, and your data is getting reviewed by the AI. So AI knows what you're talking, what you're buying, what you're thinking. Based on your data, the business decisions happens, and that is the reason why Mukesh Ambani said in a statement, now the data is a new oil. Because after Reliance Industries, they did a lot of oil in manufacturing. Now they realize oil may deplete, but data will never deplete. So data is a new oil. Flipkart, I'm sure we all are aware. The Flipkart valuation was an interesting story. If you see, May valuation was 2.6 billion. July valuation went into 7.1 billion. Imagine in 3 months, valuation increased 3 times. In December, valuation increased 11.5 billion. July 15 billion. July 16, after 1 year, it became almost half because a rumor came that the promoters fought among each other. In next month, again the valuation went almost 50% up because a news came that the SoftBank is into, it went into half. Any idea what happened? It went into half in November 2016. I'm sure nobody can forget that what happened in November 2016, why it went into half. A word an announcement came, Mitro. No, it happened in 2016. The demonetization happened, and the entire Flipkart or entire e-commerce industry put on a halt. What happened in that? The value went dropped significantly. So now till date, we all know these Flipkart has not earned a single penny. Similarly, if you go to Paytm, in Paytm, the value came from 2.3, 4.8, May 17. The value almost become, just a second. In May 17, the value almost become double, because why Paytm increased value so much? Again, because of demonetization. So demonetization happened, it lost to Flipkart but gained to Paytm because everybody was using online mode of Paytm. Now, if you see the valuation of Flipkart, 2017 the loss was 245 crores, book loss for the year. The valuation came $7.6 billion. In 2018, the loss was 2063 crores. This is loss for a year. Any idea how much valuation it would have come in 2018? Approx number, if you can think of what the valuation would have gone. Any vague number you can think of? Give me any number. What do you think the valuation could have gone? Assuming the numbers are in front of you, that in 245 crore loss, the valuation was 7.6 billion. 2018, the loss hit was 2063 crores. No, that is too high. That has never reached at that time. So the valuation actually went up to $20 billion. And the people all said that the values are nonsense. How can the value increase so high when the loss is increasing 10 times? Question was raised on the valuation fraternity that you don't know how to do valuation properly. Similarly, in Paytm, the loss was increasing from 890 crore. It increased to 1500 crore approximately. And consistently, they were doubling their losses every year. Per year loss. In 2019 also, they doubled their loss. The valuation increased to $16 billion. So people say we do not trust on the valuation fraternity. They are putting any number what the client want. That is not a right question. And that icing on the cake was when one of the promoters of RPG Enterprises, chairman, he made a classic tweet. And he made a tweet that if I travel in Ola taxi and stay in Oyo and pay through my Paytm, I will increase the losses of all the three companies. Still trying to understand the premise. The more the losses, higher the capitalizations. Perhaps I'm too old world. So he says, even if I do all use, and why we go for Ola, Paytm, because we get a cashback, discount cashback. So if I use cashbacks, the losses will increase. If the losses are going to increase, then how the valuation is getting increased? So he asked a simple question, and which everybody has a doubt that despite having so much of, despite not earning a single penny, why the losses are increasing so much? Why the valuation? Anybody can think and let me know why the valuation is increasing so much, despite the companies have not made any single profit till date. Anybody has any thoughts on that? Any thoughts on, is it logical, illogical, reasonable, non-reasonable? Goodwill. One is goodwill. Okay. Future. So people are betting on the future that we are taking huge customer base as of now. So in future we will earn a lot of profit, which is a common sense imagination, which is right. So we want to acquire so many people on the platform. So if Ola or Amazon has so many people on their platform, if not today, tomorrow they will give a profit. Okay. Now tell me honestly, majority of people will have Ola and Uber both apps in your mobile. Generally, people have both apps. Generally, people keep both apps on their mobile. And when you are standing at airport or railway station, and I need to go to my home or anywhere, generally I will compare both the prices, or I will say only no, I will only go to Uber. As a consumer, if I have two choices, I will compare whichever is giving the cheaper price, and I will go that. So a customer is not loyal. A customer is more beneficial to what it seems to him, which is a logical customer will do that, right? Even if you are a multi-millionaire, if you're getting two options, I will see which is coming faster. So my first choice will be which car is coming more faster to me. Second, which is more cheaper. Both the things I will look. So customer will always go where will why they are taking more, why people are betting more. They say in future there will be only two players. Whatever you take, whatever revolution you take, whether be it a take example of, let's say, cars, it will be only Ola and Uber in future. Take examples of food deliveries, it will be only Zomato and Swiggy. Remember there used to be a Food Panda. Is it there now? Food Panda is gone. There were Uber Eats. Uber Eats is in India. It has been acquired by Zomato. So Zomato, so all these two players, ultimately there will be only two big players in India or anywhere in the world who will rule the Amazon, Flipkart. So they will start buying all the small or mid-sized players so that future there will be only two people who will rule the industry. Then the consumer has only two options. So either it will buy from Ola or he'll go to Uber. So they expect in future, not today, 10, 20 years later, only there will be only two market suppliers. So then the premium charge will be very high and they will make the future. In startups, you will not make money in next 5, 10 years. 10 to 20, 30 years will actually take time if you're talking about digital revolution to come, and it will eventually happen. So Ashwat Damodaran says there are two people, there are two kind of investors. One investor goes on this theory that yes, in future 10, 20 years later, I will actually get the profits and I'll actually earn the money. There is a second investor, second kind of investors who works on the theory of, which theory is known as the bigger fool theory. The bigger fool theory means a fool buys a stock at a higher price, thinking that there will be one bigger fool than him in the market who will buy the stock at a much higher price than him. The problem in this theory becomes when you are the ultimate fool and you are not able to sell it to some other fool, because people buy in anticipation that the stock will go high, and if it does not go high, you are at large. What is the problem for these startup companies? These stocks are all listed or unlisted? All are unlisted. So very difficult to exit. So having said that, Warren Buffett says we need to understand accounting numbers are just the beginning and not the end of business valuation. The valuation will not necessarily come from numbers, it comes from the story. And the startup is a story called GMV, gross merchandise value. How many people buy from us, even though we are making a loss? See how many people are on our board. So if you can find that, if you can explode your number, that I have 1 lakh people on my board, you get a more valuation based on your numbers. How much you are making profit may not make sense today, but in future it will make. So we'll take a 5 or 10 minutes break. You prefer 5 minutes break or 10 minutes break? Can we have a break now? Can we take a break now and resume at 11:30? Okay. So we'll try to resume before 11:30. So we'll start at 11:30. Okay. So try to come by 11 between 11:25 and 11:30. Whoever comes early will have more questions to answer. So I think we have 2 members joined with whom we do not have a introduction. So can we have Govardhan ji? If you have small introduction, little introduction from where you are, what you do, or Vijay Lakshmi ji.
Yeah, this is Vijay Lakshmi. I'm a chartered accountant. I qualified in the year 2017, and I'm practicing chartered accountant with Mr. Nityananda. I have a partnership firm.
Okay, and based in Chennai?
No, I'm from Bangalore. My
Bangalore.
office is in Chamarajpet.
Chamarajpet. Okay. And Mr. Govardhan, if you have joined, come back now or not yet? Anyways, I think we'll take time.
I'm here. Yeah.
Okay. Yes, sir. Yes, sir. Please, sir. If you can let us know a little bit about your background, like where you are from and what you do.
Yeah, I'm from Chennai. I'm Govardhan. I'm from Chennai, and I was with earlier with Mahendra, working as a regional finance head. Then I resigned my job and started my practice. Since 2011, I'm into practice.
That's good.
So I have some close to around 13 years of experience in the corporate. Then started my practice.
Okay, no, that's good. That's good. So now, and this field is also new for everyone. So I think this also field is a good opportunity. And my personal suggestion would be anybody who's coming into practice, this should be one of your opportunities. If you are IBB insolvency professional, then also it is an added advantage, or it should be like vice versa. But this field is huge, and why it will be huge, I'll just show you tell you shortly in 2 minutes. So now we know we are legally recognized. Now this is a good opportunity for everyone. Let me just keep the chat mode on, so if you're writing, I can see. So now where we need a registered valuer. So this is a section where mandatory you need a registered valuer certificate from Companies Act. This list I will not go through. You can read whenever you want time, because when the assignment comes, we first look into which section we need to issue a report. So generally, almost in all sections of Companies Act, generally we need a registered valuer certificate, but not necessary for all. Not necessary. For example, a common controversial topic: in case of buyback, you don't need a registered valuer certificate formally. It is not compulsory required in case of buyback. But if somebody wants to take, then there is no harm. If you want to issue a right issue shares, if a company, so those who are from company secretary understand right issue very well. So if you are those who are not from that background, it's a very simple concept. If you are having existing shareholders and you are issuing additional shares to them, then valuation is not required. Anybody can tell me why valuation is not required? In case, what is the logic which government would have thought that if I'm issuing shares to my existing shareholders in a right issue form, why valuation is not needed? Any particular reason you can think of? Somebody need to speak who has not even answered till now. Because if the government would have allowed, I would have got more opportunities, right? But why government did not allow this? There has to be some logic. Government says, okay, if a shareholder, you're issuing to existing shareholder, no need. So for example, there are existing shareholder holding 10,000 shares, assuming. If I'm issuing a new one share to new shareholder who is not a part of existing shareholder, only one share, I need to get a valuation done for that one share also. I'm only issuing one. But if I'm issuing 1 lakh shares to existing shares in a right issue format, no valuation is required. Any idea why this logic? What could be the logic? Government says, okay, for existing shareholder, do not do a right issue. And answer is in common sense. Anybody need to think? Because if you will not respond, then how you will come to know that you are wrong? No, how can you say, Arun, these shares are valued? Because I suppose there are already 10,000 shares issued. So I'm issuing next 50,000 shares. Then how these shares are valued? Because I would have issued at 10 rupees at the time of incorporation.
the logic may not fit, because how do you know I have a comfort? Suppose I'll give you another twist to this. We both are disgruntled shareholders. You are also unhappy, I'm also unhappy with you. Then if both shareholders do not have a comfort level, then now the logic government has taken, what is the logic government has taken? When you are issuing a right issue, you are giving in same proportion to their existing shareholding to all. So suppose there are two shareholders, A and B, they are having 50-50 shareholding. Now you are issuing again new shares in the same proportion. Is it impacting their right of share? Answer is no. Because even after issuing right issue, my shareholding will remain 50-50. So my impact, it is not impacting in my existing line. If your existing right is not getting impacted, government says no valuation. Similarly, if you are having a 100% shareholding subsidiary company, and those who do anybody who deals in amalgamation, section 232, 233, anybody who practices in amalgamation of companies, anybody in our group? Yes, no, maybe. Nobody practice amalgamation. So okay. So if whenever you do an amalgamation of holding company with subsidiary company on one merger case, so so Mansiji, if you recall, if I'm doing a 100% subsidiary acquisition, then also I don't need to do a valuation. Why I don't need to do a valuation? Because 100% is going to, because will be no change in the shareholding rights of the original holding company. So whenever you go for a valuation, think logically. Now my one last question on this, then we'll come to a little bit more opportunities. There is a company, private limited, ABC Limited. A and B are planning to sell their shares to D, new shareholder. Do we need a valuation under Companies Act? Yes, no, maybe. What about others? Anybody else? What is your view, Shraddhaji? Yes, no, maybe. So we do not need a valuation under Companies Act. Now, those who have said yes, tell me why we do not need a valuation under Companies Act. Again, I'll repeat my question. There's a company ABC Private Limited. A and B individual shareholders are selling to D, the new shareholder. They sold their shares in an individual capacity. So why we do not need a valuation under Companies Act? Any idea why we don't need a valuation under Companies Act? Logical answer. And again, I'm expecting right answers. I'm expecting a thought process, so that thought process is important. Answers will fall automatically because it is in their capacity, and most important, company is not involved. The money will come to whose pocket? ABC Private Limited pocket or A and B individual pocket? Money will never come to the company. If the money is not coming to the company is least concerned. It is only the individual's pocket which is coming. So companies is not all involved. Now, interesting point. As per law, I don't need even a valuation under Income Tax Act. That sounds funny. Under law, I do not require a valuation under Income Tax Act also, because in Income Tax Act you don't do a valuation when there is a transfer of shares. When we say you do not do a valuation, means under Income Tax Act there is a fixed formula where the numbers need to be punched in, and you don't need to do a valuation. No, even if that's what I'm trying to say, you don't need a valuation report from a registered chartered accountant or from a merchant banker for sale of shares. For issue of shares, you need a report. But when you're doing a sale of shares for a transfer of shares, you don't need a report mandatory. Okay, client takes it. We also insist to take a report. That is for a compliance, for a safeguarding purpose. But does the law mandates? So the answer is law do not mandate. If you again go and read section 11 UA, it does not say take a report from a registered valuer. They say get a valuation done as per 11 UA. This can be done by management also. So this, if you wherever you go through, if you're transferring shares, no valuation report needed in case example of given A and B. But if you're issuing new shares, we need a valuation report. So there are so many opportunities under Companies Act, right issue, except right issue, so many ways you need a valuation. M&A valuation, we discuss in under Companies Act. You always need, wherever you're doing Ind AS, you need a valuation under Companies Act mandate. Wherever you're following Ind AS, wherever merger happens, you need to do a valuation as per fair value accounting. Wherever you do a business combination, property, plant, impairment, this COVID period, April to June, when entire professionals were sitting at home with no choice, only the registered valuers are very busy because all listed companies, majority of listed companies, get the valuation done from registered valuers for impairment testing. Because this this COVID, Ind AS 136 was applicable, and for impairment testing, a lot of valuations given their assignments. So if you are in practicing area, try to find companies who follow Ind AS, and there you will get a lot of assignments because it is mandatory in Ind AS to get evaluations done. So generally they prefer registered value to do it. Though law is not clear, should it be done by only registered valuer or a CA or a management can do it. But wherever the auditors are big 4 or big 10 firms, they insist the evaluation should be done by registered value. Now comes the most important part where a lot of assignments and opportunity comes, insolvency and bankruptcy. I'm sure we all are little bit aware of what is IBC. That background we are aware. At least we read in newspapers so much. So we are at least basic aware of the idea. So the law says whenever an assignment goes into IBC, the resolution professional shall appoint 2 registered valuers to determine the fair value and liquidation value of the company. So it is generally 2 valuers should be appointed. So now, what do you think? Does it suggest 2 registered valuers, or it says 6 valuers? So that means 2 from each asset class, 2 SFA, 2 land and building, 2 plant and machinery. That makes total 6 valuers, or only any 2 asset class valuers. What do you think? Suppose there is a company who has land also, plant and machinery also, and financial assets also. So the RP can appoint only 2 valuers of any asset class. Will that fine, or it should be 6? Common sense wise and logically, what do you think can be answered? So श्रद्धा जी खर्चा बचा रही है आईपी का, बोले बेचारा 6 अपॉइंट करेगा, 6 को फीस देगा, बेटर है 2 को अपॉइंट कर लो. Common sense wise that looks logical, common sense wise. So this confusion was there for a year. For a year this confusion was there because the law was not very clear. People were interpreting in their own way. और जिनको खर्चा बचाना होता है वो श्रद्धा जी की साइड लेते थे, और जिनको हमें असाइनमेंट चाहिए होते थे, हम इसको अदर वे में इंटरप्रेट करते थे. Because I am getting impacted, right? Because if I say 6, so my 6 values get opportunity. So finally IBBA listened to our side of view, and IBBA says it means 6 registered valuers, 2 from each asset class. Now put yourself into the RP shoes. Would you like to appoint 2 RVs for each asset class? That makes 6 valuers. Or would you like to appoint 2 registered valuer entities who has 3 asset class valuers in their company? So suppose there is a company called ABC and a company called DEF. They all have 3 asset class valuers registered with them. ABC is into 3 asset class, DEF is into 3 asset class. As a RP, if you have given a choice, would you appoint 6 individual valuers, or you will appoint 2 RVEs? Common sense wise, everybody will go to RVE, because understand RP is a very busy man. He would not like to enter into 6 appointment letters, 6 follow-ups. It's better for him, he will appoint 2 entities and do a 1 single point of contact in each entity and do a follow-up with them. And this is one of the reasons why you will notice the number of RVEs opening has increased too high in this year, because a lot of RPs and a lot of IPE, insolvency professional entities, they have made their policy very clear that now we will only appoint RVEs, we will not deal with individual valuers. That is the reason you will see a lot of RVEs started in process. And if you ask me personally, in future, if you need to work in IBC cases, RVE will be the best option. And later on, banks will also insist, because mostly in all cases banks are the insolvency professionals. They will also insist, banks are the committee of creditors, operational creditors, financial creditors. they will insist that assignment should be given only to RVEs. So that is the future part we need to see. Now, so wherever the two valuers are there, suppose a bank RP has appointed two valuers, and the two valuers have given a value. Somebody has given a value, let's say,
நீங்க
I have
யூஸ்
given
பண்ணிக்கங்க. நான்
100 crore.
ஐபேட்ல லாகின் பண்ணிட்டேன். ஓகே.
Please.
Okay.
Gordon, you are asking some question? Okay, you are taking your call. So there are two valuers. One valuer has given a 100 crore value. Second valuer has given a 150 crore value. What should RP do then? What should RP do then? What value he should take? How should he take a fair value then? So there is a one valuation of, let's say, land. One valuer has given 100 crore and one has taken 150 crore. So Purushothamanji views is take the minimum value, because we have taught prudence concept since beginning to follow a conservative approach and take. But Purushothamji, by this, are we not taking a wrong approach? By maybe the second valuer who is given 150 crore might have done the right approach. The first valuer would be immature like me, would have given a wrong approach. It would be my first assignment. I did not know the pure economics. I would have done a wrong valuation. Because what is the problem with this valuation certificate? The problem with valuation certificate is I cannot pull, just like if I take a new driving license, I put L out of my car so that people know that he's immature. He might hit you, even though he's a license. He might hit you. So people are scared. So no, but there is no guidance rates available, because in valuations, if I take guidance that you're not doing evaluation, right? Suppose if I say what is the circle rate available, take that, then I've not done evaluation. Then I've just multiplied that. But then there might be some other things you need to factor. Maybe he's not aware. Maybe he's not aware of comparable transactions happened. Maybe he's not aware of what. So I'm just giving a perspective. So if I say, if I only take minimum value, may not be the right. If I say I will only take the maximum value, may not be the right. So ideally would be average. That's the average. So it will for sure happen. Acha, can you think a possibility if two valuers are giving value under IBC, the value will same? Is the possibility the value will be same? Yes, no, maybe. It should never be. Unfortunately, if your value is similar or is coming same, if your value is exactly coming same, what will the impression it will go to RP and committee? That these two people have collided, sit together, and would have made the report accordingly, and they are not independent. So if your value is matching, that's a bigger problem. If value is not matching, then you are in a safe zone. So in evaluation, two values will always give a different value. So IBB has given a rule that whenever there is a significant difference in valuation of two valuers, then he should appoint a third valuer. So we need to appoint a third valuer there. So suppose I have given a value 100 crore, second valuer has given a value 150 crore, third valuer has given a value 200 crore. Then what should be done? Now this is कहानी में twist. मैंने 100 दिया, second वाले ने 150 दिया, third वाले ने 200 दे दिया. अब क्या करेंगे? Fourth value पे जा नहीं सकते, because it's a never ending process. Now we have stopped at third value. What should RP do now? How the fair value should be taken? Any idea? Average of all three या क्या करना चाहिए? If I get to three numbers, what should I do? Majority decision. The problem is everybody says I am correct. There is a problem here. Now, acha, first, what do you mean by significant difference? Is there any criteria? So there is no criteria given in IBBA regulation which says a major difference of 20% above, 30% above is called significant. So this term has no meaning. It is on your independent assumption. What is market practice? Market practice is anything above 20% or below 20% is considered significant difference. So if I have given a value 100 and somebody is given 115, 120, we think it's the right value. If somebody is given 150, that means more than that. So that means it's a significant difference. So in IBC, at least 2 valuers always get assignment at least, and third valuer may come if there's a significant difference. Now this is exam question. Now understand an exam, what should be the answer? In that case, whenever you get a third value and you are getting a 3 values, the rule says take the average of 2 closest near values. So in case of 150 and 200 and 100, 150 and 200 are the closest values. Why I should not take 100 and 150? Because in IBC, the objective is to maximize the value of assets of a company going under liquidation. So I will not give conservative value. I will take 150 and 200. So an exam may ask us such a question that what should be done if you are getting 3 values? The answer is take average of 2 closest value. Okay. And we have one IP with us, Manorji, and he has said that once you all become valuers, whenever he gets first assignment, he will give evaluation to people who are the member of this group. Those are participants studying. So at least, and those who are coming into practice, get a good network from IPs or resolution professionals, because a lot of work will flow from this. And this is a regular opportunity. You can get a huge assignments, and the fees can be as good as it can be depending on the nature and complexity of assignments. Just a second. Okay. So you always can have. So now we discuss mandatory. It should be Companies Act. IBC is mandatory registered value required. SEBI only REIT and investment trust. The RV has been allowed recently. Non-mandatory are SEBI, income tax, RBI, FEMA. But now this is a hope which I'm expecting in future. I call this journey from one section to full act. As of now, in section Companies Act, only 247 talks about registered value. There is only one section. Now a new bill has been placed under Parliament. It is under discussion with Ministry, known as Valuers Bill, will be known as Valuers Act 2020. If it get passed, it will get passed, but when it will get, we are not sure. But whenever it get passed, what will happen to us? It says, in the framework, it says, all 14 acts, they have mentioned 14 acts, in a phased manner, they will adopt only registered valuer certificate. So which is a huge opportunity for us. Currently, Companies Act and IBC itself are a huge opportunity. But in future, when in Banking Act, Income Tax Act, SARFAESI, FEMA, SEBI, Black Money Act, and somebody was mentioning they do work on FEMA. So we need a lot of FEMA certificates and FEMA valuation. If that is being done by registered valuers, so huge opportunity. And we need to understand a lot of money will flow to India in future and is flowing. So a lot of assignments come in FEMA. So it will be a huge opportunity for professionals to work. They missed to mention GST in the 14 acts. Unfortunately, GST was not mentioned. But then we had a discussion with IBBA, and they say the GST head is a member of this committee. So it will be included shortly. GST will also come. So wherever there is a dispute between GST authorities and client, a valuation will be taken by registered valuer. So I can expect a Pandora of opportunities in future. So it does not matter how many valuers we have. So as of now, we have 1,200 valuers. Even we have 20,000 valuers also across India. The work will be sufficient because the kind of coverage we are covering is huge. And I'm sure everybody knows Income Tax Act. So many companies transaction happens on buy and sell. So it can be a huge opportunity. What is the basis of valuation date we discussed? What is the valuation date? Valuation report date we discussed. Premise we discussed. There are 2 premises: going concern or liquidation. Just for one thing, UDIN, those who become registered valuers and are chartered accountants in practice, for you, UDIN is mandatory. You will always argue that I am not issuing report under capacity of CA, but ICI is made mandatory that UDIN has to be taken. Later on, UDIN will be issued by IBBA also, that whatever report you issue, you need to use the UDIN. Premise we discussed, going concern and liquidation. Going concern will always at a entity is running, and a liquidation is entity is closed. How many approaches we have of valuation? Anybody has idea? Whatever basics we understand, what are the valuation approaches we have? Anybody can mention? Okay. What are
Market
the
approach.
Sorry.
Market approach, net worth
Yes.
approach.
Yes.
Fair value and
Vijayalakshmi ji, what you mentioned are not approaches, they are methods.
Sorry. Okay.
No issues. I'm just trying to say. Now there are three approaches. Kal Aaj Kal. It was an old movie of Raj Kapoor, his father and his son. Very old movie. Kal Aaj Kal. What does that mean? It means past, present, and future, which means our three approaches: cost, market, income. Whatever I bought yesterday, that is my cost. I actually bought it. That is my cost approach. How much I can sell or how much I can get a value today in a market. So suppose if I bought a laptop 2 days back and that laptop is now, if I buy today, if another company is selling that same laptop at another price, that will become a fair value. Cost will all, the price is different and value is different, as you discussed earlier. So market is what I am able to get today, compare looking at the comparables. And aane wala kal, future means how much income I can generate in future considering, and which generally we use in case of startups. So I'm sure common sense which you all know, if I'm valuing startup, can I use cost approach ever? I can never ever use cost approach ever. I have choice to use any three approaches. All three approaches have equal value. I cannot say income approach is best, market is best, cost is worst. This standard says these are three approaches worldwide. All three have equal standing. I can use all three. I can use only one. But whenever I'm choosing an approach, I need to see logics that which approach I sound is better. So in case of startups, you will never take cost approach. In case of, no, you will not even take market approach also. Why will not take market approach, Shraddha? If you can tell me why will not take. So you tell me answer. Why you should not take market approach? I know you are saying I have given an answer and you are asking me why I should not use this approach. So my question is, you have said market approach should be used in case of starter, and I am saying you should not use market approach. Why you should not use?
My point of view in this case was that since it's a startup, then obviously we have to look at the market scenario to understand what the
Okay. Now I have not even. This will be covered probably after the session, lunch session. What are the approaches and how? I'll just touch base. अच्छा, ये श्रद्धा, ये आप एग्री करोगे? कोई भी स्टार्टअप बोलेगा कि आई एम कॉपी ऑफ अनदर स्टार्टअप, यार स्टार्टअप बोलेगा आई एम यूनिक. ओला भी अपने आप को नया बोलता है, बोले मैं नया स्टार्टअप हूं. हर स्टार्टअप अपने आप को यूनिक बोलता है, राइट? सो मार्केट अप्रोच होती है व्हेन यू हैव अ कंपेरेबल्स. वंस यू हैव अ कंपेरेबल्स एंड यू हैव डेटा. सपोज लैंड की बात करते हैं एग्जांपल. अगर आप जैसे सपोज आप पूना में रहते, नहीं आप कहाँ रहते हैं, जो जिस भी आप एरिया में रहते हैं, सपोज सॉरी नोएडा, कोलकाता, सॉरी कोलकाता. सो कोलकाता में अगर मैं सॉल्ट लेक में कोई प्लॉट खरीदूंगा तो मैं सॉल्ट लेक के नियर बाय एरियाज देखूंगा. व्हाट इज द प्राइस गेटिंग? सो आई हैव अ डेटा अवेलेबल, कितनी की रजिस्ट्री हुई. सो आई गेट अ कंपेरेबल ट्रांजेक्शन. In startups, data is not available publicly, so I cannot take market approach. Or I will not say कि Swiggy will not say I am equal to Zomato. Swiggy will say हम Zomato से एक level ऊपर है, because we use a different approach. So every startup will try to justify we are a unique, we cannot be comparable. So in startups, generally we use income approach, where we say that today we are not earning any revenue, but in future we will earn so much of revenue. So that is always. Where we use cost approach for those entities who only has a heavy asset base. For example, there is a company whose objective is only to rental warehouses. So I made a lot of warehouses, lot of buildings I have made, and my job is only to give warehousing rent. So if somebody asks me to value, I can say, okay, my cost of land is as of now today, so at least this is my fair value, because I may earn rentals in future or not, we don't know, it is probability. But how much land base I have? So those who are heavy asset based industries, they use cost approach. Those who are looking forward, their income approach. Those who are having a comparable transaction data, they can use market approach. All three approaches are fine depending on what you use. So these three are approaches. Then each approach has various methods. So these methods are not only methods. You can have any variations. For example, market approach can have market price method. For example, if your stock is listed, so that is a market approach and market price. If I have a stock of Infosys and that is listed on BSC, so we will have the same price. जो Sensex ने price दिया, मैं वही price लूंगा. That is a market price method. Comparable companies multiple method. I am Infosys.
but I am not listed on a stock exchange. TCS is listed on a stock exchange. So Infosys क्या करेगा? Because we are simple comparable companies, we both are in the same function. So Infosys, assuming Infosys is unlisted, Infosys will follow what TCS valuation is coming because TCS is listed. So we will try to do a valuation comparing the comparable companies, which is a direct comparison. अगर suppose ऐसा भी comparison नहीं है, then I will look for a comparable transaction. Suppose I am a startup and there is another startup. Suppose Swiggy को foreign से funding आई at let's say $1 million की at certain price. So it will give me a comparable transaction idea that if you have this much of turnover, I can have a transaction at this price. So it can be a comparable companies also, comparable transactions also. We are free to choose any method. In case of income approach, we can go for discounted DCF, which is most preferred use. Maximum it is used DCF. Relief from royalty only for intangibles. These all methods will be covered in the evening. Cost approach, replacement or reproduction cost, whatever you want, that can be taken. That is one. Now rules, we'll go to the rules. If I've given you rules in the PDF in your WhatsApp. If you can download that rules, it will be easy for you to review the rules. Now, if you can open that PDF, what you have, if you can, that's fine. Otherwise, open in next 5-10 minutes. Just read the section rule 8. Just read rule 8, and then I will discuss one thing. Or I'll quickly read for you. What does rule 8 says? Rule 8 says, whenever a valuer will do a valuation, you need to do valuation as per standards notified by central government. As of now, central government has not notified any standard. So if the central government has not notified any standard, we need to go to the exception. So exception says, till the time central government does not notify, a valuer will make valuations as per internationally accepted valuation standards and valuation standards adopted by RVOs. So we have 14 RVOs. As of now, only ICAI RVO has adopted standards for valuations. So generally, those who are member of ICAI RVO or chartered accountants, we follow ICAI RVO standards. Rest, no other RVO has adopted standards. So as of now, that is a base. So I have a choice. I can go to ICAI RVO standards or I can go to internationally accepted valuation standards. Now, what do you mean by internationally accepted valuation standards? Any idea? This point has led to a lot of confusion because when I say internationally accepted standards, valuation standard issued by US, issued by UK, issued by European Council are international standards. If somebody says valuation standard issued by Bangladesh can be considered internationally standard, yes, no, maybe. So this term internationally is a very wide interpreted term. No, sir, I can always say that is a problem because Purushottamji, that is the biggest issue. Because when I say internationally, anything outside India is international. Now, how do I say I will not use Bangladesh standard or I will use which standard? So I'm saying international itself becomes so many things, right? But so what is the parameter of making widely accepted? Because I don't know which standards is used by which country. So there can be very different arguments to it. So it was requested to government that at least you notify which should I take standard, because what will happen? Suppose I'm doing one valuation. Let's say I'm doing a valuation of let's say any startup in India, but I want to follow international standards. If one valuer use US standards, then answer will be different. If one valuer use UK standard, then the answer will be different. So you cannot put a reader on a lurch that based on different standards valuation will change. So it causes a problem on the fraternity. So practically what happens practically, we all use IVS standards, that is international valuation standards, which is issued by European Council, which is worldwide prevalent accepted, which is India has taken a benchmark, and currently central government is making standards in India based on IVS standards. As of now, ICAI is government of India is reviewing the standards to notify, but they will make as per almost in the lines of IVS. Okay. In exam, a question comes, who has the authority to notify standards? Answer will never be IBBI or MCA. Answer will be central government. So in the rule says central government has the authority to notify standards. So it should be done by central government. Okay. So hierarchy of standards would be, right now it is not there. Once the standard comes, whenever central government notifies, that standard has to be followed. If the central government has not notified, which is in the current scenario, there is no notification, then you follow whatever the statute say. So if you are doing income tax valuation, if you're doing RBI or FEMA, so those who are doing FEMA practice, in FEMA it is written follow internationally valuation accepted standard methodology. So if the standard says internationally, then I cannot take India standard, because ICI is a standard also. In FEMA, I cannot use ICI standards because that is not internationally accepted. So I will take whatever statute says. If no, then follow IE international standards. Else, what is followed by RVO. When we say international, there are so many bodies: IVSC, TF, RICS, CFA, Canada. Each standard has equal weightage. Generally, people prefer IVSC to have easy comparison. And IVSC standards are considered more better because the entire European Council has adopted it. UK follows it, and it is in a very simple, plain language. Whenever you read IVSC standards, they are very good to read and very important. For you, IVS 210 should be read mandatory. IVS 210 you can note down. I will share the IVS standards if you want. IVS 210 is for goodwill, intangibles. Some question comes in exam on that, so read that. Now, what are the, I'll quickly take 5 minutes. What are the valuation issues? What is the biggest valuation issue? Bias in valuation. So biasness is very, very basic in valuation. And what is the biasness? There are few biases in valuation. Suppose I tell you, tell you, you need to do a valuation of a company. You will agree to do a valuation. I'm sure everybody will agree to do a valuation if given assignment. I will say, okay, I will do a valuation. But then I will say, but one of their board of directors is Vijay Mallya on the board. I will give a positive feeling, negative feeling. I will do an optimistic valuation, negative valuation. Hearing the background. So it is so my bias now completely changes from doing a valuation to how not to do a valuation now. Because if I know Vijay Mallya is on the board, I might get one of the issue. But then somebody says, okay, Narayan Murthy is also on the board, Ratan Tata is also on the board, and Anil Ambani and Mukesh Ambani is also on the board. Before even doing the evaluation, with the name of the board, the thought process changes. What is the biggest bias in evaluation apart from all biases? One bias which nobody can which you can never ignore. Ashwath Damodaran has given a very widely quote, and that quote he has quoted. Before we discuss that quote, now you tell me, if a buyer is appointing you for a valuation, if the buyer is asking you to do a valuation, subconsciously you will give a higher value to the asset or a lower value to the asset. Subconsciously, I know you all will aim to do a fair value. That will be your approach. Common sense wise, we will always give a lower value, even though the buyer is not telling you to do a fudging with the valuation. He is not saying give me a lower value. Subconsciously, I will give a lower value. Why? Any reason, Arun or Vijay Lakshmi, why we are giving a lower value? Which is fair. I agree. I am also on your side. I will also give a lower value. But why we will give a lower value? What is the thought process of giving a lower value? If you can let me know. Sorry?
Being more conservative.
Being more conservative. Now I'll flip the other question. If the seller has asked you, if the seller would have asked you, would have given a lower value or higher value? If the seller would have asked you to a point, then we would have given a higher value. Then our conservatism goes out of window. Why? Then we are not conservative. Then we are prudent, or then we are practical, right? Now, why this happens? A sudden shift of thought. My interest is linked to the buyer or seller. So Ashwath Damodaran made a very apt quote, and he says, you tell me who paid for the fees of valuation, and I can tell you how much biasness has come into the valuation. And it is very correct. And he himself says it is very difficult to segregate yourself, because if the buyer is giving a valuation assignment, you think my duty is towards buyer. So instead of giving a fair value, you try to come into buyer shoes, which cannot be avoided. So bias valuation is always there. Uncertainty is always there, that we will cover. Valuation process is a black box model. Government is saying now that valuation process is always considered like a black box model. You are making too complicated in models, and you're not actually looking to the process. Information overload is fine. Rest we all can discuss. Last is most important. Every issue you can handle. Documentation, you can always do a good documentation. You can find information overload. You can segregate. Even if you do any of the errors from one to last, you can always defend. But the last error you can never defend. Human error in punching data you can never defend. This is an example of one of the valuation report issued by one of the biggest merchant bankers in income tax department, and the department caught this valuation report. And what happened in this valuation report? One formula error actually made a 42 crore loss of the value. So what happened in this one formula error? Instead of putting in dead sign, he have put by mistake he put minus 21. So instead of minusing, it add, because the formula was planted in such a way that it added the number. If you see the equity value post money on the screen, the number got added. It should not have been added, it should have been reduced, because their formula was a mistake. Now the client had to suffer a huge penalty. Now you cannot go to a regulator and say it was my typo, my article put a wrong formula. Ultimately you are held responsible. So never ever leave this kind of assignments in the junior's hand. Ultimate responsibility is on you. So you need to manually check, and computer is just in just out. Whatever you put in, the result will come only on that. Now let's understand few MCQs on valuation rules before we actually read to the rules. You may have a query that, and you should have a query that, without even teaching or discussing valuation rules, why we are discussing the questions. So why we are discussing the questions to understand how much is your guesswork works, and in case in exam some question comes, how can you think logically, and whatever wrong answers you will give here, for sure you will not repeat those mistakes in exam. That I am 100% sure. Now quickly answer, we have 5 minutes to cover this, so that we'll go through the rules now. After this, we'll review the rules, whatever I've given a hard copy to soft copy to you on PDF, WhatsApp. Quickly answer, so that we'll come to know what we are doing right or wrong. So Purushothamanji, you are IP, or you are reading IPs, or if you can, because you are giving correct answers.
I am only cost accountant.
You are cost accountant. No, because you are giving a correct answer. So correct answer can be only given by two people, either
I
who are
see.
IPs,
No.
either who are IPs, or who are reading this, or who have actually read this. So it's very good. I am very happy if you have read the rules. I would be more than happy if somebody has read the rules. Now, why in exam this question looks so tough? So as we common sense wise, we will always give 8 years common sense wise. But in the valuation rules of this, they have mentioned that 3 years is the answer. Generally, in all other laws, 8 years is generally standard. Now, the funny part was, which Manoharji will agree. Manoharji, you are here? Manohar sir, you are here? So when a question of IBBA is there, insolvency professional is most relevant to answer. Manoharji, he is absent today now. Okay. Now, funny part is, if you are appearing for insolvency professional exam, IP exam, there this answer is 10 years. So for insolvency professional, 8 years. For insolvency professionals, you need to maintain working paper for 8 years for insolvency professionals in under IBBI. But for valuation professionals under IBBI, it is 3 years minimum. So that caused confusion in exam, and a lot of people get issue. Let me go to next. Quickly answer. Generally, whenever that's a one free advice, free tip, whenever you get MCQs and where you do not understand and whenever you do not understand the exact meaning of any option, that would be the generally correct answer. If you are getting 4 options and you think you're not able to understand the meaning of one word correctly, that should be the right answer. That's on a lighter note. Don't take it seriously. Now, the correct answer is forthright. And why forthright is correct answer? Because it's not that something rocket science. It's just because in the rules they've written that the value shall be honest, straightforward, and forthright in all relationship. Ethical looks logical, transparent looks logical, but in the rules what they've written, that will be the only correct answer. Now, even if you have not read the rules, this question will test your English. If you are convent educated, then for sure you will get the correct answer. This question is interplay of English. Read this question correctly, you'll get the correct answer.
Integrity.
Okay. Okay. As a professional, okay, before that, if you read first four lines, first four words, if you read first four words, you will get an answer. So I'm sure Kolkata has a good convent education in Kolkata. If you read first four words, you will get a correct answer.
Service.
What do we render? As if we always render service. You display integrity, you follow ethics, you portray professionalism, but you always render service. So as a value, you render service, standards of service. So that's why when somebody has message that the questions are absurd, because these are memory based rules. These rules are not logic. These are memory based rules. So those who have given service. So we'll go through that also. Again, this is a logical question. Even without reading rules, you should get an answer, correct answer. Even if you have not read the rules, you should know the answer.
Long-term professional knowledge.
Purushothamanji, the problem with at least professionals like me is that if you tell me something, this is expected from you, do you think I will do or I will ignore? I will try to avoid if it is only expectation. So C cannot be the correct answer. Choice lies between A, B, and D. Okay. Now, whenever you read the rule starts with should or shall. Whenever the rules are drafted in law, we never use the word should. We always use the word shall and may. So the correct answer is shall continuously. Though should strive to looks very logical. Though if you're reading from a plain angle, it looks logical because okay, value should try to maintain update. But as per the law, it is shall continuously. This is one of the most difficult questions because all answers look same. For a second, I thought my laptop has shown a damage because I could see 3 lines in between. Then I realized these lines are from the Zoom app. You are using something on Zoom app. I thought my laptop got some damage on it. Quickly check what could be the best option. All answers look same. All answers look same. But if you have heard me, I would have answered. I would have used this word when I give an example of 3 years post and 3 years past. I use that word. Now, when I got this exam, I first just a second. I think I need to unmute somebody. So when this exam came, I put D as an answer. I thought because D looks the most logical word because considering it would cover everything. But then that was a wrong answer. I told you value should not be influenced. That is the reason. So the correct answer is A. You should not be influenced. So I agree, all answers look same, factors look same, influence look same, but correct answer is influence. You should not have influence. I'm sure this everybody knows it. Nobody will go wrong on this. You cannot charge a success fee. You can charge abnormal low fee, abnormal high fee, whatever you want, you can charge. Success fee you cannot charge. No, you can charge extremely low fee. So I'll give you a recent example, Shalini. One of the SR Steel, I'm sure SR Group, we all are aware that it is into IBC. We all are aware. It has more than 10,000, 20,000 crore assets valuation. A valuer quoted rupee 1 as a valuation fee. So the land and building and plant and machinery valuer, they quoted rupee 1 for a valuation assignment. Now, can anybody say why somebody will quote rupee 1 as a valuation fees for such a assignment? 1 rupee does not make any commercial sense. Why somebody will quote rupee 1? So this question was asked by NCLT to them that why you quoted rupee 1. So their answer was, in the law it is not written we cannot quote any low fees. There is no bar. No, not to collide. No, no, no. That is other thing. Collision came later on. Collision did not came at that time. The reason they gave rupee 1 as a quote, they say, sir, we just become a registered valuer now. We don't have enough assignments. By taking SR assignment in our balance sheet, in our portfolio, my value will double so high. Because if tomorrow newspaper comes, Sumit Hadda valued SR, which is India's top 10 biggest defaulter accounts. So my goodwill will grow very high. And whatever, even if I would have charged 1 lakh rupees, I would not have get that kind of name, fame, and future business prospects, which by just charging rupee 1, I will get it. So the law allows you to charge abnormally low fee, abnormally high fee. Success fee is not written in the rules. Then it was not allotted to them. Now I'll quickly rush from the MCQs because the slides anyway will be with you. You can see that wherever you make a mistakes, you can go through. I will take only important things which you can need to go. Okay. Quickly, last question, then we will go to the MCQ rules, valuation rules. Quickly answer this one. So if you read the question and read the options, you should get an answer. For sure, D cannot be the answer. And why D cannot be the answer? Because, and for sure, B also cannot be the answer. Why B and D cannot be the answer? Because it does not look good to write in rules that, do not give him black scotch or, black label. So that liquor does not look good. B also does not look good because it is not a parliamentary language. That kickback does not sound good, in terms of rules, when we are talking of rules. So option goes between A and C. Now, Shraddha ji has answered F, financial, financials. Okay. Financial means balance sheet P&L, right? Or no? Absolutely. That is I was looking for. No, you have, Vijayalakshmi, you have actually made the wrong sentence. This is what I was looking the correct answer. Since the word is A, incentive cannot come. Because if I have to start a word with vowel, it has to be an. Since there is no an, that's the correct answer is financial. And that is the goof up happens because in exam, what happens? And again, I understand if you have not read the rules, you will not get the right answer. But understand, and on a common sense language also, we generally think financial means only balance sheet P&L. That's the problem with our professionals. That's what we understand. But in UK, these rules are copied from UK. In UK, the word says financial means balance sheet P&L and any financial money advantage. Since the word "and" is not there, so incentive is ruled out. So at times in exam, you need to have holistic view to give exam. Again, no need to worry. We'll all learn the process. Now, just note down few things if you have pen paper. Else, it can be covered in the rules also. Not a worry. Anyway, slides are with you, just for your memory purpose. My one humble advice would be, you can listen the lectures, hold it's your choice. If you have just a copy or a notepad and you can start noting down some things, it will help you, because whatever you write will always remain in your memory, because at least it goes into the back of your mind. There is you hear, you may forget, but you may write, you may remember. So that is, choice is yours. So an exam question comes on forms. So form A should be filled by whom? So they ask various questions that once you become a valuer, who should fill form A? So form A should be filled by individuals with 5,000 rupees non-refundable fee. So once you become RV, once you pass the exam, you need to deposit 5,000 rupees for IBBI and fill form A. Form B should be filled by whom? Any idea? Quickly respond now, because we need to go through the rules, little bit lengthy rules. Form B should be filled by RVE. Anybody who wants to become RVE. How much fees, Arun? How much fees need to be deposited then? पैसा भी देना पड़ेगा 10,000 rupees. So if you need to fill form B, it has to be filled by RVE, 10,000 rupees. Then form C is for what? If you can think quickly, right, wrong, does not matter. Form C is for, no, form C is for, what is RV? RV is form A. Shalini ji, what is form RV means? You want to say RVO? Because RV is form A. No, that's what I'm asking. Form A is for registered valuer, certificate for individual or companies. So form C would be, C starts for certificate. Certificate will be given by IBBI for against form A or form B. So in, against A, B, C, you become a form C. Form D for, think what can be form D for? Form D should be for, anybody can think what can be form D? I'm sure you all know this. You should know this.
It's for
Form,
order.
sorry, form D is for?
For some sort of order.
I could not get it.
Scheme.
No, form D is for RVO. If I want to make a RVO, how much fees then? How much money I need to pay? फीस भी देना पड़ेगा ना, कितना फीस आरवीओ का? 50K. Just double it. It is lakh rupees. So if I need to make form RVO, I need to fill form D and lakh rupees. And form E is the certificate given by IBBI against form D. This is a certificate given by IBBI. Okay, so IBBI will give a certificate to RVO under form E. Just remember in exam the forms and certificates, because they ask this questions for exams. Now comes the timelines. Suppose I filled a form today, I passed the exam and I filled the form today. Within how many days IBBI should grant me certificate under form C? Any idea how many days you think? Shalini, 15 days is too optimistic from a government regulatory agency. Expecting 15 days is too optimistic. So it is actually 60 days. So 60 days from the date of application. So IBBI will give you a certificate. If I make a mistake in filling a form, suppose I put a wrong address, I put a wrong details, membership number wrong, whatever, I made a mistake, then how many days IBBI will give me to rectify the form? Because these are all online forms now. So IBBI will give me 15 days time, 21 days time. So if I made any errors in the certificate, they will give me 21 days time to rectify the form. Okay. This 21 days will be included in the 60 days category or will be excluded from 60 days? Whatever the time IBBI is given should be common sense. It should be excluded because you made a mistake. So it should be excluded. Okay. Now, can it happen that I pass the exam? I secured, let's say 75%. I passed the exam and I send the examination form to registration form to IBBI, and IBBI says, no, I don't want to give membership to you. Possible? Not possible? Can it happen that I passed the exam, फिर IBBI बोलता है नहीं, हमें आपको membership नहीं देना? Any scenario? Is it possible? Not possible? First of all, possibility maybe due to certain other reasons possible. So agar if that happens, if that ever happens, the rule says if the IBBI decides that we don't want to give you membership, then within 45 days they will give you a notice that we don't want to give you membership, and then they will give you an opportunity. What opportunity they will give you? So they say within 45 days of your filing, they will say we think we don't want to give you membership. Now they will ask the valuer, you justify why you should be given membership. How much time they will give for this response to member? We'll come on the reasons why the reasons are such. First we'll understand how much time do you think they will give you the member to respond? कितना time देंगे? 5 दिन, 10 दिन, 15 दिन, 1 महीना? Response करने का कोई time होगा? How much time would be? Any idea? Think. Yeah, they will give you reasons. So they will give you 15 days time. So they will give you 15 days time, and I'll tell you what are the probable reasons they are giving. they will give you 15 days time for 15 days time for responding that why you think you deserve a membership. After your response, within how many days IBBA should give you a final yes or no? So I've given a response in 15 days. After receiving my response, within how many days IBBA should give me a final yes or no? Then within 30 days. So after giving my response, नहीं IBBA को भी time लगेगा ना, आप response दोगे उसको सोचेगा. So 30 days they will give you a final response that why you should be given or not given. Now, what are the reasons where IBBI may give notices? First, the foremost important reason, you have taken a credit card and defaulted. You have taken a bank loan, defaulted. Your CIBIL is bad. Because CIBIL में you know that once you apply, your CIBIL goes. Your CIBIL is in the form A. अगर आप form A खोल के देखेंगे तो उसमें CIBIL का column है. So you need to submit your CIBIL. So if there is something wrong in your CIBIL, that becomes the first question mark, that when we are giving you a regulatory power and you are not a man of moral character, why should we give you membership? Second, any complaint pending against you in your ICI, ICSI or ICMI RVO, whatever RVO you are, whatever profession you are, if you are a CA, CS, cost accountant, if any complaint pending against you, then it will be a question. Third, any criminal case or any civil default case against you. Suppose you have a check bouncing case. Suppose you have a client has put you into court for some dispute, or your family has your wife has put a court against you that you are doing a domestic violence. I'm giving a hypothetical examples, and which is one of the cases where people have been blocked. So there might be a personal difference between you and your wife, but that has gone to the court. Till that judgment does not happen, you will not grant membership, because the court says if somebody's here the principle will not work, give me the benefit till I'm not convicted. Here the court says agar if there cannot be a fire without a smoke, there cannot be smoke without a fire. If there is some case pending against you, till the case gets settled, you will not be get a membership. Now these are few reasons. Suppose you are suppose last 3 years you are NRI, then the question will say you cannot get a membership to a NRI. It should be a resident in India RV. So these are few examples where you may get a notice. Very funny example where you may get a notice. Very funny example, which we all need to be taken care of. Suppose you tell me you are going to give an exam today after the evening, and in exam hall you gave exam, you secured 80 marks, let's say. You passed the exam today and came out. Once you came out of the center, what are the first things you will do? Quickly tell me, what are the first few things you will do? पहले तो फीलिंग एब्जॉर्ब करेंगे, पास हो गए, बोले हम कैसे पास हो गए, वही फर्स्ट अटेम्प्ट में, चलो हो गए पास, मान लें गलती से वो पास भी हो गए. अब पास में सबसे पहले हम क्या करेंगे, क्या क्या करते हैं हम सबसे पहले? What are the few things you will do? Share news. How you will share the news? And that actually caused a 6-month suspension to a registered valuer. Purushottam ji, gone are those kind of people who actually give a treat. Now you are so generous, you will give a treat, and I will actually come to take a treat also. But if you give a treat, so people will either, first of all, they call their family, friends, family, mother, father or spouse and everyone, or friends that, okay, become registered valuers. That's a good thing. Now the damage they will do, they will go to the LinkedIn or Facebook and they will write a word, became registered valuer today. Now, can you believe on this, because of this ground, 4 valuers certificate was held for 6 months by IBBI. Now, can you tell me what is the wrong they did? So you give an exam, you pass the exam, you write on the website, became registered valuer today. What is the issue with IBBI then? Why did IBBI put an objection to this? Any idea? Can you think what was the reason IBBI objected and IBBI did not granted them certificate for 6 months? Any idea you can think? Logically, do you think any reason? Because IBBI says it amounts to soliciting of work without becoming a registered valuer. You have just cleared the exam. You have not become a valuer. You will become a registered valuer only when we will give you membership. So we have not given you membership. So without that, how can you claim? And this amounts to soliciting of business. They say once you become a member, once we issue a certificate, you upload on your website that, okay, you upload on Facebook, LinkedIn with bold italics, I become registered valuer, we are fine. But without that, do not. You can just write past valuation exam today. That is the only fine, that you are telling people you passed. But telling that you became registered valuer sounds a unsoliciting work, which is not expected from a professional. Okay, though it looks funny, but that's what the way IBBA is. And I'm sure Manojji will agree with me if he is there. IBBA is the only regulator that has teeth and it bites too. Rest all regulators are not strict. IBBA is one of the strictest regulator. Now this valuation rules, if you can open from your mobile, if it is easy, or you can download this. It is on your website, on the WhatsApp, this PDF. This rule will actually give you around 4 marks of questions. So MCQs will come around 4 marks. You need to go through the rules very carefully. Quickly note down from which points I specifically you should go through. So first, you should go through section 247 and read section 458, 59, 69. These sections you go through on the top of the line. 247 will talk about your responsibilities and all. 458, 59 talks about the penalties. Remember I told you penalty of 10 years of imprisonment that comes from 458 and all. If you go through, then just note what is the date this rules comes into existence. So this rules comes into existence since 18th October 2017. It is written on the bottom of this page. So existence of this rule is 18th October. Then you don't need to read rule para 1, para 2, you can ignore. So I'll tell you where you need to ignore. So it is written that it is effective from 18th October 2017. So they ask an exam question. This rule is become effective from which date? So ignore para 1, para 2, not relevant. Para 3, read para 3 once mandatory. You need to read para 3 mandatory. In para 3, which specific points mandatory you should know? One, point number I, mandatory, that if a valuer has gone into jail for 6 months, then he cannot register for next 5 years. If he has gone to jail for 7 years ever, he can never become registered ever. So para I you need to read. Para J you need to read. In para J, a simple question comes that under which income tax penalty, if a valuer has got a penalty, he should not become MPanel. That is section 271J, very small section in Income Tax Act, where if ITO gives a penalty to a valuer, to a chartered accountant or a person giving a false advice, he will not become valuer for next 5 years. So read section IJ thoroughly. K, what do you mean by fit and proper person? So fit and proper person means minimum he should be integrity, reputation, character. So your integrity and character will come from your CIBIL, your competence and financial solvency. How do IBBA check your competence and financial solvency? And that is the reason your RVO would have asked your 3-year returns. IBBA made mandatory your last 3-year returns of everyone should be given. One of the reason why one valuer was not given membership, the rule says you should, so what he did was he showed to the land and this case, all cases are on public domain. So this case is available on IBBA website. He mentioned on the website that it was mentioned on his website that so he mentioned in the form that he is a practicing land and building valuer from so many time. So he says he's a practicing valuer. When you say you are a practicing valuer, means you should get income from business sources. His last 3 years return was checked and it was shown as a salary in one of the company under one section 192. His TDS was getting deducted as a salary. So the IBBA asked, you mentioned us that you are 3 years in practice, but when we got your IT returns, it was showing 3 years of job. So you lied to IBBI. So that's why we are rejecting you for 6 months or 1 year. So he was given a punishment. So you cannot lie to IBBI. So be very careful what information you give. They are very, very choosy. If I need to be registered as an entity, suppose we are 10 partners. Suppose we are 10 partners. How many you think need to be registered valuers to register as a firm as an entity? Suppose I'm 10 partners, normal, 10 CAs are there. Out of those 10 CAs, how many you think should be registered valuers to register? Any idea? Any vague idea? Out of 10, how many should be registered valuers to get the firm registered? No. If there are 10 partners, then it should be 3. 3 partners. In case it is it is only 3. The number is 3. In case there are only 2 partners, then whichever is lower. So all 2 partners has to be registered valuer. In case of more than 3 partners is required only. If all 10 can become, there is no harm. But as per IBBA, minimum 3 should be registered valuers. Clause 4 not relevant, you can ignore it. Clause 5 not relevant, you can ignore it. Clause 6 is relevant. Clause 6 is what we have discussed just now. Clause 6 we discussed for form A, B, C, D, E. That comes under clause 6. So if you have read that presentation, that should be sufficient. It is the same clause 6, same presentation. Clause 7 you can ignore, not for exam purpose, but just one thing to read for your understanding. Why the number of partnership firms are getting less? Read clause J. If you can read clause J, it says, in case an entity is registered valuer, he will be liable jointly and severally along with the partners who signs and acts in respect of valuation engagement on behalf of entity. So it becomes responsibility for everyone in a registered valuer case. That is the reason RV goes less. That is for your understanding. Clause 8, you just need to know one thing, that the valuer need to follow valuation as per standards notified by central government. And in case central government is not notified, then in the meantime, he can go for international standards and valuation by RVO. Rest 2 and 3 are not relevant, clause 8, 2 and 3, but once you become registered valuer, it is mandatory for you to follow clause 8, subclause 3. Whenever you make a report, all these points will come into the valuation report, mandatory. Once you become registered valuer, it is only for in the practice. Clause 9, just note one thing in clause 9, there is a concept of temporary surrender. What does that mean? Suppose I am registered valuer today and tomorrow I got a huge paying job in Reliance Jio, or I got a huge job in abroad. In Middle East is giving me 10 crore rupees a year. Then I'll say, okay, let me go for a year or 2 years and work abroad and come back. So if you are a registered valuer and you want to take any job or become NRI or start your own business, you can temporarily surrender your membership for any period. But what you need to do is you need to go and tell your RVO that, sir, I want to temporarily surrender my membership. Then this RVO will need to inform IBBI within 7 days. So not later than 7 days, RVO will inform IBBI that one of my member has come and now he want to temporarily surrender the membership. That you need to inform. Okay? So an exam question come within how many days you need to inform? Within 7 days, RVO will inform. Clause 10 not relevant, 11 not relevant, ignore that. 12 not relevant. Well, I just told you that it has to be section 8 company now only. Earlier, anybody can make RVOs. Earlier, anybody Indian Trust Society. Now it is only section 8. So this rule got amended. So no need to read clause 12. Clause 13 is the same rule we discussed of form D and E. Clause 13 talks about RVE. So RVO that we discussed, form D and form E. So that is also you can ignore. Clause 14 you can ignore, not relevant. Clause 15 you can ignore. Now, suppose if somebody wants to make a complaint against RV, suppose I issued a report and the shareholder is not happy or anybody is not happy, within by paying how much fees I can make a complaint to IBBI? Any idea? How much fees I need to pay to IBBI? Any idea you can think of? Any amount of fees? So what do you mean by that? You understand by that? So rule 16 says, no, there has to be some fees. Rule 16 says you pay 1,000 rupees. So you pay a fees, or somebody can pay a fees of 1,000 rupees and put a complaint against RVO, registered valuer or RVO. If you understand the implication of this, it means somebody can take you for a ride for just spending 1,000 rupees. 100 रुपए में कोई भी आपकी 1000 रुपए में कोई भी आपकी फिरकी ले सकता है. Suppose I am a disgruntled shareholder. You are doing a valuation of a minority shares. Will minority will be happy with my value, or minority will always want more value? Minority, the person who want to take exit will never be happy with your value. We will always say thoda zyada value do. If some minority makes a complaint against you, he will just need to spend 1,000 rupees and you need to run around the insolvency IBBA board and other boards. So whenever you take any minority engagements where you need to do a fair valuation of minority, be very careful and double on the report, so that whenever if the report goes to the testing part, testimony, it can be justified that you use the right things. See, nobody, you cannot stop anybody from complaining, but what you can, that is external factor. You cannot stop, but what you can stop is your report is so strong that even if you don't go, somebody reads your report, he can say, no, report value has done the right job. So just 16, remember 1,000 rupees. Clause 17, you can ignore. Clause 18, just we discuss clause 18, understand who has the power to notify standards, central government. Clause 19, you need to read clause 19, and in clause 19 read the committees of valuation standards. Who will be the committee members? It can be it will be a chairman. Who are mandatory members? One member from MCA, IBBI, and legislative that you need to read. So read this context, who are mandatory members, who are optional members, what are the tenures that you need to read. They have a tenure of 3 years and 2 terms. That basic things 19 you need to read thoroughly. 2021, if you have read the sections 448, 458, which I told you, then you can ignore it. Then you can ignore 2021. If you read the first, that can be ignored. It just says if you have done a false statement, then you will be liable under 448. 448 will go take you to 447. It says put a penalty of 10 years. Now this annexure 1, you need to read thoroughly. Annexure 1 is very important because here a lot of MCQ question comes. Like for example, we discuss the question of he should be honest, straightforward, forthright. Value shall render all time of services. So a lot of question comes from these rules. So one line understanding you need to read once. So at least you will read these rules 2-3 times. You'll be able to go through. A lot of MCQs are available which have come on this. It will be easy to go through. Okay. So entire clause 1 you need to read. Just one point, just for a conclusion. Okay. Okay. So we discussed a point that last 3 years and pre 3 years and post 3 years, we cannot be associated. We cannot be an interest. One point says, even if I was a director of a company last 4 years back, I just need to give a disclosure that what I was connected. So in the last 5 years, if I was connected anywhere in any some independent capacity, any some way, I just need to give a disclosure that I was connected. Suppose I am a partner of a firm and my firm was giving rendering services in last 4 years to that company, but I was not at all involved. Let's say I am in Delhi, my Bombay firm was giving services. Neither I know the interaction with the client, neither I have any relationship with the client. So I need to give a declaration that our firm was connected in last 5 years in whatever manner. It does not stop you not to do that, but it says at least disclose. Okay. So read Annexure 1 thoroughly. Annexure 1 should be given a plain reading. Annexure 2 consists of form A, B, C, D, E, what we discussed. That you don't need to read at all. Annexure 2 should be deleted. That's why whenever the PDF I have given, I deleted those pages. No need to read Annexure 2. It is of no point. Annexure 2 for you. Annexure 3 is mandatory. Annexure 3 you need to read. Annexure 1 Annexure 1 speaks about individual RV, registered valuers, code of conduct of registered valuers. Annexure 3 talks about RVO. How should a RVO behave? So in Annexure 3, what are the specific points you need to read? If you can mark down, it will be easy for you to read. Instead of reading all, first read clause 3, amendment, how amendment should happen. So you go and have a reading of amendment, what the amendment you think should be done by an amendment of bylaws. One is amendment. Second, composition of board of directors, how board of directors should be composed. So it says that it does not say how many minimum director you should have. It leave up to the particular RVO. But what it says, you need to have more than 50% resident in India, more than they should be independent, not more than 1/4 should be registered valuers. So that you need to go through. So just read the composition. Clause 5, 6 not relevant. This part 2, only the relevant part will come from clause 7. From here, committees of organization. So we need to understand what are the optional committee. So the optional committee is advisory committee of member is an optional committee. What are the mandatory committees? And question comes on mandatory committees. So read clause 8 mandatory, this one, other committees of organization. So there are 4 committees that are mandatory. There is no audit committee and all in this. This is a section 8 company. So 4 committees mandatory as per IBBI: membership, monitoring, grievance redressal, and disciplinary committee. Once you read, also read that how many members are mandatory. So here it says if it is a GRC, it has to be 3 members. If it is a disciplinary, it has to be 1 member from authority, and authority means IBBI. You need to read all these 3 things. That is 1. So read clause 8. Clause 9 you can ignore. Clause 10, if you wish, you can read, otherwise no need. 11, 12 not relevant. 13 not relevant. 14, 15 till 20 not relevant. From 21 to 26, read thoroughly. It talks about your disciplinary committee. So question comes on disciplinary committee, how disciplinary proceeding happens. So 21 to 26, you need to read once. If you need any clarification, any understanding, maybe on a weekend, you can read today, tomorrow, next week, whenever we can discuss that. If you need any understanding, conceptual clarity issue. 27 just need know one thing. I discussed about temporary surrender. When should a member should surrender? So they're given a reasons. When he is going abroad, he is leaving, he should surrender the membership, and he should inform to the RVO that I am leaving membership within 30 days. When you are taking abroad, expulsion, as we discussed, you can expel. And once just note one thing: when a member can be expelled, when a fees has not been paid upon 2 reminders. The fees, they ask the fees and they give 2 reminders to a member. RV does not pay fees to RVO, he can be expelled after giving 2 notices. So in example, this question is asked, 2, 3, 4 people give 3 options generally, its answer is 2. Annexure 4 talks about qualification of a valuer. What should be the valuer qualification? Should we read about plant and machinery and land and building qualification also, or we should read only SFA qualification? पढ़ना चाहिए क्या प्लांट मशीनरी का? आया ना? Yes, no, maybe. You need to read mandatory, because in syllabus they does not say this rule is only for SFA this class. So in exam they actually ask a question: to what is the qualification for land and building? He should be in civil engineering or other thing. So at least just read once. So this is only 1 pager annexure. This is all on rules. You need to, in a one reading, you will not at least understand. One reading, you'll at least get an idea. But if you read 2-3 times, you'll be able to know what the answer should be. And you will be also able to know what the, if you do a lot of MCQs, you'll get an idea what questions should be asked in rules. Now, we'll take a 5-minute short break before we go into IBC. So if you can come back quickly. I'll just take 5 minutes comfort break to drink a cup of hot water. So let's resume in next 5 minutes quickly. We'll start on IBC.
I hope you all are back. So shall we resume? Because now between your lunch and this, from now and between your lunch, it is only the IBC presentation pending. So let us go through that and understand what is IBC and how it is relevant for us, and what in exam purpose, how it is important. So Manoj will be, for him it will be very easy because he's already IP, so he knows all IP provisions. For rest of us, those who are looking for first time and have not even read anything earlier, you may find little bit over the board, but it is a very simple concept. So I'm sure I understand basic, we all know IBC, that's a basic assumption. Can I take the basic presumption that at least we have basic awareness of IBC? Basic or it is wrong to make some such assumption? If anybody can, who does not know a little bit of IBC, if you can let me know. There is no harm in that, but I'm just trying to understand. Then I need to figure out how fast or how slow I need to run the session. If we understand basic concepts, then it will be easy for me. If we do not understand, then I need to do a little bit more extra work. Okay, brief some basics. Okay, we'll go with the basics first. So first, answer me my first question. Why this code was needed? Fine. No, agree. I'll try to go with basics and try to cover. We'll start from basics. Any idea why this code was needed, or who was the man responsible for getting this code? Who is known as the poster boy for getting this code, getting approved very fast? So, and it on a lighter note, it is always discussed when the king of good times, he was having a bad time. His bad time started, and when he laundered of money somewhere around 9,000 to 10,000 crores of India and taken abroad, which is alleged in the newspapers. So the question came that when a sitting MP, he was a sitting member of parliament, chairman of so many other companies, chairman of United Breweries, Kingfisher, when a member of parliament takes some money out of India or a big businessman, then what recourse our financial industry have to take that money back? So he has a good time. So unfortunately, he became a poster boy. But no, apart from him, so many other people did so much of siphoning of funds. Then at that time the RBI governor made a very classic remark. He says, "We do not punish the wrongdoers unless he's small and weak. Nobody wants to go after the rich and well connected, which means they get away with even more. People try to squeeze only the smaller one." And I'm sure you will all would, at least when we used to audit banks, I used to remember when Vijay Mallya have taken 5,000 and 10,000 crore rupees. So whenever SBI bank or whenever the other banks used to call for customers collections, there are some people who would have defaulted. So the first response of the collector customer was, पहले विजय माल्या से लेके आओ 5,000 करोड़ रुपए, फिर हम देंगे हमारे 2,000 रुपए. Imagine the mindset of a small customer जो बहुत छोटा है, those who give a EMI of 2,000 5,000, बोलता है उनसे तो आप लेके नहीं आ सकते और हमारे पीछे पड़े रहते हो. बैंक भी किसके पीछे स्ट्रांग बनता है? जिसको दबा सकता है. So this code gave power to bank to suppress people who are rogue defaulters, willful defaulters. Before coming this, our NPA was very high, among top 5 among the India. World over data, this data was published by World Bank summary. They say to resolve insolvency in India, it generally takes average 4.5 years. And if you take to United Kingdom, UK, they do in less than 1 or 2 years. And we cannot say our continent is a problem ki Asia mein hai. They say look at your neighbor Pakistan, they take 2.5 years 2.7 years, within less than 3 years they resolve. You are still worse than Pakistan. So this caused a lot of problem at international community. Investors sentiment was not strong. Our global ranking, if you see, our global ranking was 136 in resolving insolvency. So out of 100 countries, they say 136, out of 200 countries, 136 is not a number to be proud of. And on the other way around, in terms of recovery, how fast you can recover,
our number was coming very low. So if somebody has invested $1 and we are going into resolve insolvency, he was able to take only 25% out, that is 25 cents. Whereas if you are into Japan, you will take out 92 cents. That means only 7% loss. In India, the loss was more than 75%. So that was causing a lot of problem to India. Then we got this IBC and our ranking improved significantly. So in 2016, we got 130th rank. In 17, we got 100th rank. In 1877 and 1963 rank. So imagine from 136 to almost 63 rank, we could have got less than 50 also in 2019, but we were not able to do some change. Had we would have done that one change, we could have still less than 50. Now the next ranking will come in October 20 by October end. I'm not sure what ranking will come because of COVID, things will change, but still if the ranking comes, it will be between 50 to 60. Why still, in my view, it will not come below 50? There is one reason that we'll discuss shortly. But still we'll agree that just by taking IBC, the significantly ranking is improved in the world. Before that, in India, we have so many laws. We have Companies Act, SICA, RDDBFI, SURFACE, Companies Act. These are not working good, so we got now IBC. That's for corporate sectors. For individuals, we had any law you can think of individuals, any law you can recall where individual insolvency is defined in India. Can you think of any laws? Corporate, I showed you so many. Individual, you can recall anything? Anybody would like to have any knowledge or anything on that? For individuals, what do you think can be laws? So I'll make your life simpler. No law after 1947 has come up on insolvency on individuals. So whatever is before 1947. Any law you can think of 1947 who would have talked of insolvency? 1932, there was one law, which I'm sure most of you all know. 1932, which was the law? There is only one act which used to talk in 1932 of insolvency, Partnership Act. So that was the only act which talk of insolvency in individuals. Rest, no, there was no enough weightage on insolvency. So there was only 3 acts where insolvency was talked. But now, after IBC, things got changed. What is the objective of IBC? So that we amend all the laws relating to resolution, insolvency in various different acts, and in a speedy disposal. What is the benefit of speedy disposal? What is the impact of a time-bound manner? Suppose if a company is not paying you, you lock the company. So if the company has an asset value of 10 rupees today, if it takes 5 years to resolve, that 10 rupee will get diluted. Apart from getting diluted, after 5 years, that 10 rupees will be worth not more than 5 to 6 rupees. So because of that, they wanted to have a speedy disposal. These are theory you can always go. Now, why it is called a code? This is called Insolvency and Bankruptcy Code. This is not called Act. Can anybody think why it is called code? Why not Act? Any thought? Or why it was taken into code route, not into Act route? I know this is not for exam purpose, just for thought process, that why it is code, because normally we know Income Tax Act, GST Act, all other acts. Why it is considered code? Why they framed as a code? Logically, if you can think something. It is kind of code of conduct we follow. No, not really because of that. What is the problem within code and act? Which supersede first? Code will supersede or act will supersede generally? So, and can you think of any codes? What are the codes you can think of? CRPC code, Indian Penal Code. So these codes will always run above the act. Whatever your act do, code will always run. Absolutely. So why this was called a code? Because separate laws existed for each. Now in this code, it consolidated all laws relating to of insolvency to one law. Now because of this code, 27 acts got amended. Had they would have made only one act, IBC Act, suppose, then it would have taken them 10 years to get each act amended and get it in place. So the government played a master stroke. They made it at a code, and the code becomes superficial body. Now, whatever amendment happened in the code, automatically the act has to make changes. So there would not be any discussion that why this should be done, because the code supersedes the act. So with one change, 27 act got amended automatically. There is one, so it was just one exam question. Because of this code, which act did not got changed? So one option is Law of Limitation Act. This Law of Limitation Act did not change. Rest all other act, take it income tax, take customs, all other act got some amendment. Law of Limitation Act did not got amendment. Now this IBC covers everything, whatever you talk. The objective is to get timely recovery. This theory part I will skip to come to the basics. You can always go through slides. Now this IBC has 5 chapters, 5 parts. Part 1 talks about preliminary, that is relevant for you for your exam. What is preliminary? That we'll go through. Part 2 talks about insolvency resolution and corporate persons. Is IBC applicable to whole of India? Yes, no, maybe. Is IBC applicable to whole of India? So partly yes, partly no. IBC is partly applicable to whole of India and partly not applicable to whole of India. So this part 2, which is on insolvency for corporate person, it is applicable for whole of India. Part 3 talks about individuals and partnership firms. As of now, individuals and partnership firms are not there in active. This part 3 is excludes J&K. As of date also, this excludes Jammu and Kashmir. So part 3 is not relevant for you. Part 3 will not be for your relevance. So we can no need to read part 3. Part 4, again not relevant for you, but just for idea, what is part 4? Part 4 is only for insolvency professionals, agencies, and information utilities. What are insolvency professionals? The people who become registered insolvency professionals are IPs. Agencies there are only 3 agencies. Unlike we have 14 RVOs, in insolvency we have only 3 agencies: cost accountant, company secretaries, and CAs. These are the 3 agencies who look into for all IPAs. Information utility is again a utility tool, not relevant for you. And clause 5 talks about administrative power, so not relevant for you. So you have to only focus on clause 1 and clause 2. Now we understand about the code, and this slide probably will explain minimum what are the basic characters. First is corporate debtor. What do we mean by corporate debtor? Corporate debtor means the company who has taken a loan either from a financial creditor or from an operational creditor. So corporate debtor means a company who has taken a loan, a company or LLP. So that will be considered as a corporate debtors. We call it as a CD. Then there is a concept called financial creditor. Financial creditor means a person who has given a loan to a company with an interest value. His objective is to earn interest, so he is a financial creditor. Operational creditor means a person who has given a loan, who has not given a loan, who has rendered goods and services to a company. So just like if I am a registered valuer, I did a valuation of a company and he has not paid me a fees, so I'll be considered as an operational creditor because I have rendered services, goods or services. So I'm an operational creditor. Are we clear with these 3 basic things as of now? These 3 basic definitions? Because
Yes.
okay, then a company has not paid income tax, TDS deposits, or I have not deposited sale tax. So government of India will be considered financial creditor or operational creditor? Or it will not be considered at all? Okay. What about others? Okay. If it has to be considered, so the law has said now we will consider government as an operational creditor. Now, one can always argue neither the government of India has rendered goods and services, then why we are considering? So IBB has made a definition and they say operational creditor will also include government dues. So that will be included because government does not lend you money. So why government is not considered financial creditor? Because they have not lend you money for the interest basis. It's not that if you don't, I will give you money to give interest. So just because you are supposed to give money to government, you're not paying. That's why the interest and penalties charged for you. But the government has not done a transaction with you to pay you money for interest. So that's the reason it is not considered on financial basis. Now suppose one more example. And because we need to understand this act is also as new as valuation, it also came in 2016, very new act. There is a real estate company and you have given an advance to him for purchasing a house. The company has told you that after 2 years we will give you, after 2 years we will give the villa to you. The company has gone into liquidation now or insolvency now. You are a financial creditor or operational creditor. You have given money for your house, taking your house. So you are a financial or operational or none of them. Go on the basic definition. The definition of financial is you have lended money for the interest value of money, and operation is you have rendered goods and services. So have you rendered financial, have you rendered goods and services? You have not rendered goods and services, right? Because I want to buy. So neither I have given him service, neither I have given him goods. So it is out from operational creditor. Does it fall into financial creditor? It may or may not, because as of now, what was the first instance? You have given money not for interest, you have given money for purchasing goods. So there was a confusion in IBC in various courts. Home buyer should be treated under what category? There was a confusion. Now this confusion has been sorted out, and now in the code itself they have defined the home buyers will be considered as financial creditors, because it is assumed that why they've given money in advance, so that they get a cheaper price, so the interest value is considered. And the code itself has written IBC that home buyers are financial creditors. So in exam, if a question comes what is home buyer, it is a financial creditor. Understand this basic term. Now what is interim resolution profession? So suppose I have given 1 crore rupees to a company and the company has defaulted in paying me in interest or installments. I will go to NCLT and say, I need to approach NCLT and say this company is not paying me. You put under IBC condition under him. So NCLT will say before you give an application, find one IRP who will become a resolution professional along with you. So IRP will be the first person whose name will be gone along in the form that if the company is accepting, if the NCLT says it is a default, that person will be appointed as an interim resolution professional for 30 days initially. So that person will take care of that company which is getting under default. Why this person is appointed? The biggest change happened in IBC. The moment your application get accepted, the moment NCLT says yes, this XYZ company has defaulted in paying you, from that day onwards, the power of the board suspends. Whatever the board of members of that company, they will not be able to take any decision. So for next 30 days, the power, and for the next period, the companies and IBC, the power goes to interim resolution professional. So it can be you, me, anyone that will control the company. So imagine the biggest shift. Earlier, whenever there is a default, the lenders do not get the power. Here, after the default, the lender gets the power to run the company. RP is what? The IRP makes a committee of creditors, people who have given a loan, those are financial creditors. If the committee says, okay, we want to make Sumit as a RP only, they will continue that same IRP as RP. Else, they will change the new person. So RP is a new person who has been appointed in place of IRP. They can be same person or they can change also. Committee of creditor means whenever the company is going under trouble, whenever the IRP is appointed, IRP will give a notice in newspaper that from tomorrow I am appointed as IRP. Anybody who wants to claim money from this company, please send me your claims so that I can decide your claim. So those people who are financial creditors will be appointed as a part of committee of creditors. Suppose the company has taken loan from 20 banks, 5 individuals. So those 25 people will be considered committee of creditors. So just note down few things. It will be again coming on slide, but if you are noting it down, it will be helpful for you. Committee of creditors will be formed only of financial creditors who are not related parties. Suppose the company has taken a loan from its subsidiary, genuine loan from subsidiary, and it has defaulted. So I have taken a loan from subsidiary also and from banks also. So whenever the committee of creditors will be formed, my related party will not be form of committee of creditors. What will happen? Suppose there is no financial creditor in the company. There are only operational creditors then. So exception can be there are no financial creditors. In that case, committee of creditor will be formed only from top 18 operational creditors, one employee dues and one workman dues. Okay. I'll explain this also once the slide comes, but just for the timing, since the time may run fast. Related party I discussed, it will be or any subsidiary joint venture that cannot be a part of any meetings. Insolvency commencement date. Now this date is very important and understand this date. This date becomes as a benchmark for whatever you do in IBC. Insolvency commencement date is the date where NCLT admits your application. Suppose in the case we discuss, I have to take 1 crore rupees from a company. I went to NCLT and give an application. So suppose I have given application on 1st of September. NCLT approved today that yes, we agree. This company has not paid you 1 crore rupees. Now we authorize this company to go into IBC. Then from today onwards, that will be known as insolvency commencement date. So what will happen from this day? This ICT day, all power of this existing board stands still. The new IRP which is appointed will have that power to run the company. And now from this day, a moratorium starts. Moratorium of 180 days. What do you mean by moratorium? Moratorium means when the company get into insolvency and insolvency commencement date is allowed, for next 180 days, all existing cases which are going on the company will stand still. No new fresh case will be filed. So nobody will bother the IRP. So IRP has 180 days blanket to run the company. So nobody can bother. If there is an income tax assessment going on, that will be stopped. Court proceeding going on, that will be stopped. So that for 180 days, IRP can work on the company to revive the company. Resolution plan. Now suppose that Ruchi Soya, we all are aware, Ruchi Soya transaction, if you have read in newspapers, people are aware little bit. पढ़ा तो होगा Ruchi Soya. अगर stock market follow करते होंगे तो you will be aware of Ruchi Soya journey. So what happened in Ruchi Soya? Ruchi Soya went into insolvency. They are into problem. So one of the creditors filed a complaint that Ruchi Soya is not paying me. It went into NCLT. NCLT accepted, and bid was accepted that yes, it is defaulter. So IRP was appointed. Now when IRP gets appointed, he get a valuation done from all the valuers. He make a report. Then he submits a memorandum to public that there is a company Ruchi Soya who is under stress, who has assets and liabilities. This is the plan. Their creditors are, let's say, 10,000 crore rupees. Bankers dues there. Anybody want to take this company? Give your best bid. So people present a resolution plan. So anybody in the world who wants to invest, he will present a plan to Ruchi Soya, the committee that, sir, we want to apply your company. Then they will give a proposal that, okay, your debt is 10,000 crore rupees. I can pay you 6,000 crore rupees now. I can agree, take it or leave it. So then the lenders will decide, should we take 6,000 crore rupees now or give the company to Ruchi Soya, to the new promoters? So this resolution plan everybody presents. Whoever, lot of people will present resolution plan. Whichever is approved by the committee, that will get the company. It may happen company may reject plan also. Company says, no, we don't want to give you at a less price. It's company's choice. If the resolution plan is not accepted, company goes into liquidation. Because what is a liquidation? Resolution, the ABC is like a ventilator. There's a company in trouble. For 180 days, you try to run the company on ventilator, but you realize that you cannot run the company. Then on 180 days later, you put on a liquidation. Payment order, we will discuss. Payment order is a classic change happened in liquidation. If you recall 1956 liquidation, Companies Act liquidation, who was the first party to receive payment in a liquidation category? Whenever a liquidation happens, who receives the first payment? Which party receives the first payment, if you can recall? Under winding up of 1956, whose name was always on the top, that they will be the first one to receive liquidation? Before secured creditors also. Before that also there was one name. No, resolution person came now. I'm asking in 1956. Yeah, your answer is correct. Correct. Currently in no, but I'm asking in 1956. No, before employees also there was one term which nobody likes. That why should we pay to them? That was Government of India, government dues, exactly, all stat dues. So the first was stat dues always. Always the government taxes was to be settled first. Then you go to employees and secured creditors in proportionate basis. That's the way you used to follow. In IBC, the biggest change happened, and that is the reason why this plan got so much success. The Government of India, the statutory dues from top, it went down to 5th position. Now in the new payment order, the first person to receive money is resolution professional and liquidation cost. That means the valuer fees, your liquidation fees, your the valuers, your IP and valuers fees. So the first person to receive payment is resolution professional. Then comes wages and secured creditors and every other things. This will go through once we go to the slide. That is the most important change. Appellate authorities. So who are the appellate authorities here? In case of companies, first is NCLT. You lose at NCLT, you go to NCLAT. So NCLT is adjudicating authority. You lose at adjudicating authority, you go to appellate authority. You go to NCLAT. Within how many days of order of NCLT you can go to NCLAT? Any idea? Within how many days of receiving order from NCLT I can go to NCLAT? Legally. What is the time limit as per IBC approximate? So this question comes in exam, so note down. From NCLT to NCLAT, your time limit is 30 days. The 15 days is extra grace period, which is not considered in your statutory timelines. Your statutory timelines is only 30 days. Okay. So if I lose at NCLT, I can go to NCLAT within 30 days. If I lose at NCLAT, within how many days I can go to High Court? If I lose at NCLAT, within how many days I can go to High Court? So from NCLT I lose. Okay. 15 days, 45 days. Okay. What was my question? Where I can go from NCLAT to? Which court I said? No, which court? Which court we are going 60 days?
High Court. High Court.
High Court. The best part of this IBC proceeding is there is no High Court in between. If I lose at NCLAT, I straight away go to Supreme Court. That is the reason it has a speedy disposal. Because if I would go to High Court, then what will happen? What happened in Damini? If you remember that movie, Tariq pe Tariq, Tariq pe Tariq. So they realize if we go put another layer of High Court, it will become a big issue. So that is the best part of NCLT and IBC. From NCLT, straight away it moves to Supreme Court. And in Supreme Court, how much is the timeline? It is 45 days. So within NCLAT order, I can go to Supreme Court in 45 days. There is an additional 15 days grace period for me if I do not have a sufficient time, but that is not a statutory timeline. Statutory 45 days. So note these timelines in exam. They ask within how many days you can go and all. Withdrawal. Suppose we have gone into NCLT. Suppose I am a financial creditor. I have taken a company ABC to NCLT. Can this application be withdrawn now? Suppose company is going into IBC. Now the person has come to my home and say, sir, please settle out of the court. We want to withdraw. Can this withdrawn after admitting? but there are, let's say, 5 more financial creditors also. So I have put application. जब मैंने application लगाई थी तो मैं ही था, मुझे ही पता था, but after putting application I came to know there are 5 more financial creditors also. Now COC has been formed, we are running the business. Can it be taken back now? Yes, no, maybe. What about others people? Because I have applied application, but others says no, we want to go. Now there is a change happened now. See, understand the objective of the court or NCLT is not liquidation. The objective is your money should be settled, your dispute should be settled, so that your payment terms should be agreed. So the court has given an option and the IBC code has given an option. Even if your application is admitted, accepted, if the person who has initiated the application and 90% of the COC agrees that yes, we want to withdraw, it can be withdrawn. So now we got this option to withdraw also. So that is there. So now understand few quick things. Now we'll run quickly because we have 30 minutes left before your lunch break and session. Corporate person can go into insolvency resolution or liquidation. Insolvency resolution is going on a ventilator. Liquidation is going on a deathbed when there is no hopes left. Individuals is not relevant, ignore. Corporate person means company or LLP as of now. So we discussed the appellate authorities. DRT is not there, so don't go through individuals. Now, as I mentioned that individual is not active as of now. Individual is not individual and partnership firm rules is not active as of now. The core part 3 is not activated. Suppose I am a director of a company. I have given a default. I have given a personal guarantee. I am a director of a company. My company has defaulted. Company has gone into IBC. Insolvency professional is asking me to pay money. Can I say to him that you cannot touch me because individuals are not covered now, till now? Because if the law says individuals are not covered, then how can you touch me? Yes, no, maybe. What is your view? Why no? That's my question. Why no? When I'm saying you that my view is that part 3 is not activated. So I'm individual. If part 3 is not activated, then why? How can you touch me? That's my question. So I'm individual capacity. I have given you a guarantee. My company has defaulted. Take from company because schedule part 2 talks about companies. But he says no. I have a right to take you also, and I am defending that I am part 3. You should not take me. What do you think then? Any idea why the RP is right and why he can go on me? Because why? If you see second bullet on that, they have amended the definition. They say corporate person also includes corporate person also includes guarantor of corporate person. So if you are a personal guarantor of a corporate person, you will be tested by NCLT. So NCLT will treat you as a corporate person and put application against you. So you cannot say I am a director individual, part 3 is not applicable, so do not touch me. They can still do that. So you have to again be taken care of. So this theory will ignore why IBC came, that we all discussed. Now quick understand difference between what is the difference between resolution and liquidation. In resolution, the intent of the RP should be to revive the company, not to shut down. In liquidation, you have no choice to dissolve. Responsibility is to going concern in resolution because you need to run the company. Time period, it is expected 270 days should be the time period. Practically, it does not happen. Liquidation within 2 years to close. Haircut, voluntary acceptance. What do you mean by haircut? Suppose a company is under resolution process. I have given a loan of 10 crore rupees. I got a deal that somebody says that if you give me your loan at 8 crore rupees, I can give you now. So there is a voluntary acceptance that I am taking a 2 crore haircut now. That is my choice. Because in resolution, I have a choice to do or not to do. In liquidation, I have no choice. Whatever is the remaining, I will get. So in liquidation, if I have out of 10 crores, I am able to get 5 crores only, I will get 5 crores. I have no choice. What is the valuer's responsibility? They say that what IBBA professional always says. Is it not audible to everyone or?
It's audible.
Okay. Shraddha, are you still not able to hear me? Shraddha, I think your net is an issue at your end, I think. Okay. Maybe Jio or Airtel may have a war among at your area, so they're disconnecting. It is a network issue at times. It is expected from a valuer to do a normal haircut in evaluation. But what IBB regulator says, but we have seen a lot of valuers have done a head cut and a body cut. Head cut and body cut means suppose the value is of asset value is 10 crore rupees. You did a valuation, you can give a 10% discount. Let's say, okay, I will be able to fetch 9 crore rupees. But a lot of plant and machinery and land and building valuers have given a very wrong valuations, and of 10 crore assets, they've given a valuation of 2 crore rupees. So which is not a reasonable thing. So no, do not play with the valuations because your reports are going in a code document. The best part of IBC here is fees is negotiable in resolution profession. You can negotiate whatever fees you want. In case of liquidation, you can, it is fixed by regulations. They have given idea. It can be initiated by FC, OC, CD. Even a CD itself can go to the IBC and say that I'm not able to pay the debt of any person. You put me under I resolution category. Moratorium is mandatory available. Surface state, IRP we discussed. COC we understand what is COC. I'll cover all this shortly. Okay. Just try to understand this line in 2 minutes. This is an ideal graph. It is not mandatory graph. When we say ideal, ideal means it is supposed to happen. So what is supposed to happen that when I file an application within 14 days, if I file an application within 14 days, NCLT should admit. The moment NCLT admits, that becomes an insolvency commencement date. Then within 14 days, NCLT appoints a IRP. If it is not appointed, IRP was appointed. Within 2 days of appointment, IRP gives a public announcement, newspaper and advertisement, that now onwards I am being appointed as a RP, IRP, send me your claims. Remember, whenever you become RP, this has become a huge cost of giving newspaper advertisement. So you should take it from your client first. Creditors, then within certain days you get a creditor's claim. Then within 7 days you make a committee of creditors. Then you prepare information memorandum. Then you get a resolution plan. These are all hypothetical deadline. Practically, it never happens that way, because normally it is saying that within 14 days your NCLT should admit applications. At times it takes 6 months to 9 months to get your application admitted. It takes long time. Then your resolution plan should get approved in 180 days. If it does not get 180 days, you go for liquidation. There is one time extension allowed to you for 90 days. That extension you can use. So if you think I cannot complete in 180 days, you take 90 days extension. Now quickly understand what is the amount of default. If your amount is more than 1 lakh rupees minimum, then you can apply for the NCLT process, IBC process. There is a rule that government may increase the amount to 1 crore rupees, and in April they have actually increased the amount to 1 crore rupees. So now you cannot apply. So if my fees is due, let's say 2 lakh rupees, if today I have given a valuation and my fees is 2 lakh rupees, I cannot go to NCLT because they say the limit should be 1 crore and above. For your exam purpose, the limit should be 1 lakh because that is before before 1st of April. Any announcement after 1st of March is not relevant for you, but practically it is 1 crore. Now, do you understand the implication of this 1 crore? Financial creditor may still have 1 crore rupees outstanding generally. Do you think any operational creditor will have 1 crore rupees outstanding? No, generally I could not see any operational creditor will have a 1 crore rupees outstanding. So all MSE sector are out of it. So people are crying that now we have no right to claim money. So government is working on that, and new rule may come for MSME sectors to claim money, because 1 crore rupees limit is introduced only because of COVID. lot of people are not able to earn their bread and butter, so that was objected. I'll take the definition shortly. Let me take adjudicating authority. We discuss is NCLT. Corporate applicant is a corporate debtors. Dispute, I'll discuss what is dispute. Financial creditor means the person is given on loan, debt is amount. ICD we discussed, IRP cost we discussed, these costs we discussed, OC we discussed. Now, what is the fundamental difference between OC and FC? The fundamental difference between OC and FC, apart from the goods and services, if there is a dispute between operation creditor and company, if there is a dispute, existing dispute, you cannot go to IBC. If Shraddha ji, if you are not still able to hear, you can. Shraddha ji, I cannot. I think try to log in from mobile. That's what I can tell you. So, in case of insolvency of operational creditor, if there is a dispute that the company says you have given me a bad product, you cannot go to IBC. In case of financial creditor, dispute is not relevant. You have a dispute, not have a dispute, any FC can go to insolvency. But in case of OC, dispute is mandatory. But the dispute should be pre-existence. When we say pre-existence means dispute should not come when you went to ask for a payment. Dispute should have been told earlier. Related party we discussed, applicant we discussed. Okay. Now who can apply for NCLT? Financial creditor can go to NCLT. Operational Sunil, if you can check what is the issue with Shraddha's reception. She's not able to see. She's able to. I can see her probably on the screen. Her video is coming, but she's not able to hear or watch. I'm not sure if something from her end. So who can? FC can apply, OC can apply, and a company itself can apply. I'll skip the relevant point for you to understand. How should be applied? Form 1 need to be filled. These all theoretical process you can read. Will take time. Now real estate we discussed. Real estate, they are considered class of creditors. They can file jointly also. If there are 100 applications, 100 creditors, or 1/10 of same class, whichever is there, they can file. Now, why they allowed this option of joint? Earlier, what happened? Suppose I have taken a flat in JP Builders. The JP Builder has 10,000 flat owners. If one owner makes a complaint, entire 10,000 owners will come into a problem. So they allowed that one owner will not have a choice. Only one person will be allowed. Shraddha ji, if you're not able to hear, then there will be a recorded video which will be shared to you. So then probably you will be able to check from that also, if later on, if that is the issue. So now they have mentioned that in case of individual, you will not be allowed to file application. If it is a real estate project, it should be minimum either 100 people or 10% of the project in the same class they can apply, so that the project does not get stopped because of one person's nonsense. This theoretical parts you can ignore. This parts you can ignore. Dispute I mentioned, it as dispute should be mandatory only in case of OC. That is a dispute mandatory. For FC, there is no need of dispute. Even with dispute also, he can go. Home buyers we discussed, not OC. So practically what happens? Application is filed by any of them, FC, OC, CD. NCLT decides to accept or reject. After the application of NCLT decides, IRP is appointed. After the IRP is appointed, a committee of creditors is formed by insolvency professionals. He forms a committee. The committee decides, the committee has to conduct first meeting within 7 days. Committee need to decide, should we continue the same IRP or appoint a new IRP? It's their choice. Once the RP is decided, he prepares a memorandum. Then a plan is submitted, or resolution plan. Who wants to take over the company? Anybody can take over the company. If the plan is approved, majority is 66%. Earlier it was 75%. Now just remember, in exam a question may come, what is the majority? If 66% committee agrees to the plan, it is sent to NCLT for approval. So what happens in two ways? Suppose in case of Ruchi Soya, Patanjali has taken it. So Patanjali will give an offer to committee of Ruchi Soya. Committee of Ruchi Soya agrees to the plan. Then it is not necessary that plan will be approved. NCLT will also see whether should we approve the plan or not. NCLT will see the feasibility of the plan. Once the plan gets approved by NCLT, then the process starts. If the plan is rejected by NCLT or committee is reject the plan, then you go into liquidation process. Then liquidation starts. What happens in liquidation? So there are various ways in liquidation. If no plan is received, it may happen you do not receive any plan, or plan is rejected by tribunal, then liquidation order is passed. In the liquidation order, the fees is decided. You don't need to learn this fees or remember this fees, just for your idea that they've decided in the code that if your assignment is of, let's say, 50 crore rupees, you realize in 6 months, you will get 2.5% of that realization amount. So the fees is criteria is given for liquidation. Now, what will happen in case of liquidation? Now, this is the important thing. What is need to do? The liquidator need to prepare a report, preliminary report within 75 days. So today the company has gone into liquidation. Then within 75 days, he will prepare a report. What committee has, what the company has, what assets, what liabilities, so that NCLT knows what is to be done. Then every quarter he will send a progress report to the NCLT and the committee, and not the committee, the stakeholders. What is my position? And whenever the company is closing in the last, audited accounts needs to be given in the last quarter. Sales report and all this should be given. I'll cover this also. In insolvency, record should be maintained for 8 years. Okay. This forms and all technical you can go through. Okay, just note one point. Suppose I have company has taken a loan from abroad. I have taken a loan from on 1st January. The dollar rate was 70 rupees. My company went into liquidation, insolvency. That day the dollar rate is 75 rupees. The claim I received today, that time the rate is 80 rupees. At what price should I fix the liability? The day I had taken a loan, the day company went into insolvency, the day I received the claim. 70, 75, 80. What is the logic? What should be I had taken as a common sense? As per the no. So that's the reason I told you that commencement date is very important. So if the company is under insolvency, it should go under ICD date. So if it is going under insolvency, it is insolvency commencement date. If we are going into liquid, I will take at the liquidation commencement date. I'll skip the irrelevant part. This is a more on detail, which okay. Just go through, have a look at the distribution chart which I mentioned. When the company is going on liquidation, who will get paid first? So first payment will be received by insolvency resolution process costs. So IRP will receive his fees first. After that, secured creditors and workmen dues, then unsecured creditors, then comes government statutory dues. After that goes operation creditors. Now, if you see this waterfall mechanism, do you think operation creditor will be will be ever receive something? Because this poor guy is on the 6th number. So generally, practically, operation creditor does not get anything from liquidation. But just by sending a notice, they recover their money. If the company has genuinely money with them, they will not stop operation creditor money, because they know based on his application, we will go under insolvency and that will be a trouble. Okay. But practically, they will never get money based on IBC process. Just because of धमकी से काम होता है उनका, actual काम करने जाएंगे तो कभी नहीं मिलेगा. So I'll quickly take you to the important regulations. NCLT we discussed. NCLT to NCLAT you go to into 30 days. From NCLAT to High Supreme Court you go to 45 days. Don't take extension as your timelines. Now comes the regulations. Few regulations we need to understand. So there is a one code that is called Insolvency Bankruptcy Code. Then there are few regulations along with it. So one of the regulations is class of creditors. What do you mean by class of creditors? So as I mentioned you, if there is a financial creditors, we need to hold a meeting of committee of creditors. So generally you keep a meeting. Where you will keep a meeting? You will keep a meeting in a business hall. You will keep a meeting in a board meeting rooms or in a 5-star hotel. But suppose if I tell you that the financial creditors are 25,000 members, then where you will do a meeting? Either in a Eden Garden or Firoz Shah Kotla or Wankhede Stadium. You cannot hold 25,000 people meeting in any room, right? That is not possible. When the law was framed, they could not imagine people could be 25,000. And how did they started? When they made home buyers as a financial creditor. Once home buyers become financial creditors, there might be 25,000 home buyers. That actually happened in case of Amrapali and JP Infrastructure. So the government made a rule that wherever there is a same class of creditor, we will appoint only one person to represent to them instead of coming everyone at a same meeting room. So they appointed that in case of same class, IP should represent. Now there are two values. Now remember two things. Whenever you are going for an insolvency process, the valuation is done and a valuer need to give two values, fair value and liquidation value. So he gives both the things today, that if he goes into liquidation, how much you get. If you go into running business, how much you will earn. So two values are given in IBC report. If you are giving in a liquidation report, then you never give fair value. You just give a liquidation value, because in liquidation you are closing for sure. In insolvency, you might run and might close. IP should make appointment within 3 days. So just note down the timelines which I put bold. Whenever you receive the PPT, at least read the bold points. So IP need to make announcement. Forms you need to read once. There are at times memory questions. Which form? RP. Now here the important things to note down. RP will give notice, and whenever claims, he will verify the claims from people. So suppose there are 10 people who have given a claim that I need to take money from XYZ. RP will check from the records. Yes, they need to actually give the claim. Their name is due or not. So he will approve the claims and make the list of committee of creditors. Committee of creditors only of financial creditors, excluding related party. If there is no FC, it is 18 largest operational creditors, one workman and one employee. That should be the composition. First meeting will happen within 7 days. Now just note down few things. A simple question comes in exam. Within how many hours of minutes of meeting should be disclosed, should be circulated? So if the committee of creditor meeting happens, within how many days the minute should be circulated to all participants? So answer is 48 hours. So once the meeting finishes, RP circulates 48 hours all minutes to all members. Fees I discussed. Values we discussed earlier. It should be appointed two valuers, and there is difference value, third valuer. Just note one thing: essential supplies. If a company has gone into IBC under liquidation or under insolvency, these four supplies cannot be stopped. Electricity cannot be cut, water cannot be stopped, telephone and internet cannot be stopped. Because suppose I am a company going into insolvency, I cannot pay these things. If the companies cut it, suppose the Airtel says, Airtel has given me a connection, they say I will cut your internet, then Airtel cannot do that, because IBC says whenever you are into insolvency, you need to continue to give these services to the company, so that company might run and pay you back. If I cut water, electricity, how can an IRP work? How can anybody can work on that company? So these four services cannot be stopped. So just note what are these four services: electricity, water, telecom, and information. The liquidation, what needs to be, I've highlighted. Read those what is highlighted. You need to read where you need to give advertisement, claims that you can go through, how you should sell assets, that also you can read. Just remember one point: in liquidation, if I get to appoint two valuers and their valuation is different, we do not appoint a third valuer in liquidation process. We appoint third valuer only in IBC process, in insolvency process. But in liquidation, third valuer is not appointed. That you can go through. Voluntary is fine. It will be covered under winding up today in the evening part. That you can go through. I try to jot down what are the exam pointers generally, which you can read and have a look. If you need anything understanding more, you can read. IBC, I understand it's a big code, cannot be digested in 1 hour or even 1 day. It is a lot of complications, but we don't need to become expert in IBC. We just need to pass exam. So we need to do basic conceptual questions, which is required. Last, I will just take 2 more minutes since we are overshoot the time, just 2 minutes. One, a very interesting case in IBC. This is not related to exam at all, but just into your ethics and other things. There is a company, suppose ABC is a company, and the company need to take 4.5 crore rupees from XYZ, right? So I need to take 4.5 crore rupees from XYZ company, and I need to appoint Bhavna Rui as an insolvency professional. So I appointed her. How much do you think she would have charged fees for me for taking for getting my debt recovered? If you were in Bhavna Ruia, how much fees you could have charged? So I've given you amount 4.5 crore is the due. You tell me how much money we would have charged approximately. This is the amount I've told you, the debt due 4.5 crore rupees. Company wants debt at any cost. So company thinks it is a write-off case. But suppose if you recover the debt, how much you think you could charge? Any amount if you can tell me? Any number you can tell me? 5 lakh rupees, 1,000 rupees? No, not 1,000 rupees. 5 lakh rupees. Okay. Anything else? Now this is where we are thinking too low. It is 10 lakh rupees. Okay. Okay. I'll give you a hint now. See what the newspaper published. This case became one of the most interesting case of IBC, and it got published in newspaper. See what is the headline. Now you think. Now लग रहा है श्रद्धा कुछ हो सकता है अब फीस बढ़ा सकते हैं. Now what do you think could be the fees? Understanding the headlines, how do you think, how much you think should have charged? Now what if I tell you she charged 13.5 crore rupees at her fees. My fees is 13.5 crore rupees. So what happened in this case? So again, this become a lot of this IP was suspended later on. The reason of putting this code was case just for understanding. The law do not will say everything. So the issue was the amount due was 4.5 crore rupees. She charged 13 crore rupees, 13.5 crore rupees as her consultancy fees for 6 months. Because for 180 days you became IRP, your fees was 180 days, 13.5 crore. How did it came into notice? When the fees later went to NCLT for approval, NCLT thought it would be 1.35 crore. So NCLT thought it can be happen. Out of 4.5 crore, somebody can charge 30% recovery. It makes sense, 1.35 crore. So they said seems to be a typo. It is sounding like 13.5 crore rupees. And she said, no, it is actually 13.5 crore rupees. Then NCLT, IBBA got very angry. How can you charge such a high fees? It looks like a killing. It's like daylight robbery. How can you rob the company? So judge asked a question. NCLT judge and IBBA judge asked a question. Why did not you charge a reasonable fee? And I appreciate the lady answered. She said, sir, I have gone through all the acts in India. I have gone through all Judicial Act, Evidence Act, Companies Act, IBC Act, also code also. Nowhere the word reasonable is defined. And the dictionary meaning says reasonable is whatever you think is a reasonable is reasonable. So there is no meaning of the word reasonable. So to me, I think 13 crore is a reasonable. So court asks, yes, you have a merit in your point. Reasonable is not defined. But now you tell us, why did you charge 13.5? Why not
20 crores or why not 5 crores? Then what is the basis of 13.5? So she gave a logic that the board of the company, the 10 directors of the company used to earn 9 crore rupees in the yearly remuneration from the board. After this IBC, I will be the only one who will be on the board of the company. I will run the company on my own. So I will be working a job of a 10 directors on my alone. So नन्ही सी जान 10 लोगों का काम कर रही है, तो 9 करोड़ तो मुझे चाहिए ही चाहिए, ऊपर से 50% compensation और for taking so much extra pressure. So 13.5 crore, it's logical. Now she said she did a one blunder. She said, sir, this 13 crore also includes fees of valuer, fees of forensic auditor, fees of company secretary, and blah blah blah, which includes 5 crore additional amount. So so my fees is only 38 crore, 5 crore is for other services. But then this was a lie he told. This fees was exclusive of the IBC, exclusive of forensic valuation and other auditor. There was a separate engagement of 5 crore for other fees. So court got very angry and court then suspended her for 2 years, and court say, whenever any professional says we do not understand the meaning of the word reasonable and the act is not defined, so we expect you to remain in isolation for 2 years, sit at home and do a self introspection. What do you mean by word reasonable? So when you come after 2 years later, because they don't expect a professional to say reasonable, charge whatever you want to charge, but be at least realistic. World depends on you. So the girl was suspended later, and now she was lifetime. She was barred now recently. So be very careful. IBB is very strict. Follow your inner conscious call. Do not try to charge abnormal, because there are a lot of questions coming on. Be reasonable. I thank you all for your patience for a long day, and this is just the starting of the day. I'm sure next 6 days you will learn a lot. Do not get panicked if you think you're not able to cope up with something, because something will be first for you first time. Some things will be there, but try to read along with the sessions, presentations, and MCQs. You'll be able to solve. We'll probably meet on next week and try to cover up. If something is not clear, keep a note with you. Catch me next week. We'll discuss next week, or whenever I'll come. We have a next session. We'll discuss more on how to clear exam. What should be the exam strategy, so that we have a fair idea, that we can know the devil before we appear for the devil. So I thank you all for your patient hearing. I'll share all the presentations to the coordinator. He will share with you shortly. Have a good day, and probably lunch. You can take a lunch break, and next session will start at 3 o'clock. So try to resume at 3 o'clock. Thank you all. Take a break.